watch and figure things outside than interactive.
Right. Which is fine. I know for a lot of people that this is really new, a new kind of trading, new kind of mindset, a new kind of look at the market. So I'm perfectly fine with taking it easy. It's better to take it easy and paper trade, not trade at all, than to jump right in. Because as you guys know, anal is very much possible in this market. All right, let's do this instead. Probably have a haircut appointment. No one cares. All right, so Jumbo, I will be starting, given the fact that this is recorded, and I will be active after the fact if anyone does happen to hop in late. I'll stick by and like help them out as well. So start time is what, 10:08?
All right. Yep. Give me 1 second, and you'll hear the recording activate.
Perfect.
This conference will now be recorded.
Perfect. All right. I heard that, and we are good to go. So welcome, everyone. This is Matrix Principles 101. I titled it this, but at the same time, this is really just an intro to futures. But instead of having you guys get a textbook or go online, watch YouTube videos, we're going to approach this from how the markets truly work, instead of kind of relying on what you're probably used to now, news, technical indicators, and all of the stories from Twitter to the media. I can tell you by the end of this course, even from this first class, there will be multiple classes after the fact, but even this one class, I think the goal here is that you guys should understand, one, how the markets work, two, strategies that come into play. There's never one day that repeats itself, and you need to apply that every single day. There are days that you will find that it is best to swing, days that you'll find that it's best to scalp, and of course this week was an example of that. There were days where we found ourselves swing trading from 3724, or vice versa, just doing scalp trades. I think Bravo was able to carve out 100 points via paper trading. And again, that just speaks to the creativity that you guys have when it comes to futures trading versus options. So the content for today, we have futures basics. There should be an end there for 25 minutes. I know this is a big first step for a lot of you guys. So I really want to spend time talking about the basics, because you don't want to get in there and place a trade and place the wrong kind of trade, or even, for example, place a trade, not know that it's active, and God forbid, fall asleep and the trade goes against you 100 points in the wrong direction. These are real events that happen, and so it's very important that you understand, one, your platform, two, your margin requirements, and three, just executing trades and stops, and just market conditions. After that, we will focus on general concepts. General concepts is going to be important because we'll talk about, one, the basics of how to look at the market, from all of the global indices to time. And of course, then the segment after that is incorporating all of that together, from what we know about general futures trading and what we know about the markets, how to now implement that, because none of this information is useful to any of you if you can't use it. And then the last segment I'll leave there is for questions. I know some of you guys may be wondering, maybe perhaps, what is it that comes after this, or maybe just a review of just this material itself. It will be a lot. And so that's what I mentioned earlier in the week, where I talked about how this is actually going to be a refresher to a lot of you people. So take names like Bravo, Shishmak, you guys are going to be seeing this, and it should be pretty much a refresher to you, because you've taken a lot of these concepts and have already started to apply them, and you've done really well with that. So kudos to you guys. But for a lot of this, it will kind of feel like, okay, well, I'm just reviewing some of the information I know, and we can get into details later on. And with that being said, let's get started. So I will be constantly checking this question section as well. I don't have any questions at the moment, but I will be checking. So if you guys have any questions, drop them in there and I would do my best to answer. So futures trading. I personally believe that the micro is the greatest product for retail traders in the entire world, simply because of the creativity that it offers you, 2, the time that it offers you, and then 3, just a simple fact that you can make a lot of money on simple trading rules, and just keeping yourself completely in line with the rules that we've set here with the matrix principles. So cash index. One thing that we will talk on big time is the fact that we only ever care about the cash indices. The 3 that you guys are going to be trading the most are going to be the ES, the NQ, and the Russell. So S&P is the S&P 500, NASDAQ is the NASDAQ 100, and RUT is the Russell 2000. Some of the names that correspond to all of these indices. So you will find that Apple will fit inside the S&P 500. You'll find that Apple will also fit inside the NASDAQ. Names like Boeing will find fall into the Russell. So for me, it's very easy as a trader who trades futures to kind of understand ahead of time whether or not an Apple setup is going to work out. The reason why I say that is because if I see that NASDAQ happens to be down 1%, it's easy enough for me to believe that the technical setup or whatever setup that I had for that Apple trade is going to be down. So by me being able to predict moves in the S&P or the NASDAQ or the Russell 2000, I'm not able to predict kind of when that technical setup for Apple is going to go. And I think I've seen that be an error or a mistake that a lot of you guys have made in the past, where you're kind of looking at a great setup, a great chart, and all the time that Javon and everyone else puts into the charts, you're looking at them and it's a great setup, but it doesn't happen to work out. And that is not exactly all that the picture comes out to be, because a lot of times you guys aren't realizing that there are other forces that are in the market that happen to impact that chart, impact that trade. And so with this course, by understanding that, now you guys will be better options traders, and at least have a general understanding of certain principles regarding futures. Anyone starting out, I would always recommend you start with the MES and the MNQ or the M2K. The reason why I say that is micros, like I mentioned, are the best product for retail. Let's say, for example, you were short 3724 on Friday and you made that mistake and you had to take 100 points of a loss. 100 points of a loss is $500, right, on an ES or MES, I should say. And of course, no one wants to take a $500 loss, but let's really compare that to like a lot of the theta decay that you suffer before the move even happens, right, with a Tesla call or an Amazon call that you guys are holding, right? You guys are taking theta decay, you're taking just a loss, of course, in the movement itself, and you're losing these amounts. So the risk is very low when you really compare it to the kind of options or the kind of trades you're already taking in now, right? And where the risk starts to really turn on the retail trader, and I think I try to emphasize this point with Tradeovate, is that $5 per point is okay, right? And using that same example, it's only $500. But when you start to play around with 5 MES and it turns into $2,500, then you start blowing accounts up really, really fast, right? And we're talking worst case scenario, 100 points. Now, you don't also need to take a swing trade to lose 100 points. You can lose 100 points just by 1,000 paper cuts, right? Just making a couple bad entries here at 6 points, making a couple bad entries there, that's 7 points, making a couple of bad entries there, it's another 10 points. By the end of the day, you might already have lost 50 points. And that is the same exact effect as taking a short at 3724 and getting smacked in the mouth at 3774, right? And so I need you guys to understand that concept there. And it's the same way that you can gain points, it's the same way that you can lose points. And so it's really, really key that you're one, trading at specific times, and two, using all of the tools together. Not one tool that you're going to learn today can be used independent of another. For the bigger players out there, there are, of course, ES, NQ, and RTY. $50, $20 per point, and RTY is $50 per point. I could have $1 million and still trade the MES. The reason why is the scalability, just being able to kind of come in and say, I want 2/10 of an ES, or I'd like half of an ES, or 3/4 of an ES. It's perfect, because then you get to, of course, assess your own risk profile and whatnot. So let's step outside of this presentation so far and head to desktop and take a look at some margins. It's really important for you guys out there in futures to really understand your requirements for margin requirements, because this is how you effectively stay in the game, or can even participate in the game. So it's one thing that you guys understand, that your initial margin is going to be the absolute key for you to enter that trade. So for me to trade the micro Russell on Tradeovate, I would need to have an account balance starting at $715 in my account. This would then allow me to trade 100 per contract, each micro Russell. At the same time, that you need to also factor in when you're trading. You're going to find that your requirements are going to go up over the night, and they're of course going to rise over the night. And that's simply because a lot of the moves that occur in the markets happen overnight. If this is a regular chat session, I would ask why, but I'm just going to get straight to the answer. The reason being is a lot of the markets that open in foreign markets happen in times where the U.S. trader is asleep, right? So that's why I kept saying earlier last week, where a big sign that the sell-off was not real was that it was happening during the trading day, right? Where you could capitalize. If you were long, you could close a position. Where if you were long, you could flip short or scalp short, just to, of course, lower your risk. This is never the case, and this will never, ever be the case. Think of it when the Capitol riots happened, right? We dipped and then we ripped, and that happened all during regular hours. Think of when Netflix crashed its ER last summer, I think around July, August. Crashed, and then of course it dipped and ripped. Now it's a completely different scenario when it happens at 3 a.m. or 4 a.m. And again, if we were in the chat setting, I would ask why, but the simple answer as to why is that's when the European markets open. So it's more of a confirmation, and that is one of our key matrix times, right, is the European Open. And so that's confirmation to every trader out there that this is in fact a bearish movement. And the fact that it's happening overnight, now all of a sudden you can really manipulate price, because you can knock around those supports, because most people either one, don't have enough money to support the margin and the increase in margin as the brokers try to, de-risk their leverage. And so they will auto liquidate your accounts. So I recommend Tradeovate to anyone that is new to trading futures, only in the fact that you do start out with very low margins requirements in terms of initial margin. If you take a look at the MES as well, you can see that it costs $1,200 to trade an MES, which means if you were new to futures trading and you were, wanting to take it easy, but you at the same time wanted to capitalize on everything you were learning, I think $2,000 is a good starting amount. And if you always restrict yourself to one MES, you'll find that on a terrible 100-point loss day, that you would only lose one-fourth of your account, right? And of course, 25% is terrible. But of course, you would have liquidated or closed out the account before 100-point loss even came to be. So the risk is very much low when you, of course, start to understand yourself as a trader, and whether or not you have those intentions to be greedy or to add one MES to a losing trade, to another losing trade, another losing trade. These are habits that you need to control before you get into futures, because you will start to suffer heavier losses as that happens. So, and I tried to show you guys good habits all week, from taking profits to setting break-even stops to, of course, just waiting and just being patient. And I've shown you, of course, how that can be profitable in the end, instead of kind of what the average retail trader does, and that's kind of jump in without any context at all. And so that's some stuff for the basics for the beginning. Let's move forward. So you may be asking yourself exactly how you can start this process. I recommend anyone that is starting out their futures journey to do two things. There should be a deleted column there, but that's fine. There's an action plan that I made you guys that is exactly how I started trading futures and how I came to kind of understand markets the way I do now. And none of which require you to go out and purchase a second product or purchase a book or purchase a tool. It really does start with you, and it really just starts with watching and just being attentive of certain parts of the market and little nuances here and there. So first step, of course, is don't trade for 2 weeks. And you can paper trade, you can just simply watch, but this will be key to your learning, because the more you understand the ebbs and flows in the market, the more you understand, okay, this is going to move at this specific time, and we're going to get to this level at this specific time, because this is how the market works. We're not going to go from 3861 to 3837 until we get to euro close. Why? Because the market is absolutely predetermined, and it absolutely moves from time to time. And I think this entire week I was able to kind of demonstrate that and prove that, that there are times when the market moves, and then there are times the market fucks. And during the time the market fucks, you kind of want to stay out. You want to just watch. You want to fade the extremes. You want to just watch exactly, where people are getting trapped. And then, of course, that 12:30, that 2:30 time, those key times that we have, now all of a sudden will give you that trade, that confirmation ahead of time of what to do. The next step, and I keep mentioning this as well, is journal your thoughts, guys. Please journal your thoughts. What I mean by that is, you'll find that the market, of course, is going to make you feel a certain way at a certain time for a specific reason. And when you journal these thoughts, and of course, then write what happened after the fact, now you're able to kind of start to, now can see where the market, of course, is tricking the retail trader. I have notes myself of going back over a year or two now of ideas that I've had, right? Okay, well, the market just sold 60 points. I think it'll sell another 30 points. It does not, right? In fact, it rips 100 points the opposite way. I write these things down because the next time that kind of move happens, I can already tell myself that I've seen it before, and I've seen these reactions before. And I can fake this reaction because I know this reaction because it was me. The only difference is I'm aware that this is me, or that this was me, and I kind of predict the following reaction, of course, that can happen. There are 6 indices that you should be focused on. It is the SPX, NDX, RUT, DAX, FTSE, and the CAC. Put simply, you have the first 3 are the US markets. The next 3 are the European markets. DAX is Germany. At CAC, we're talking about the London markets. You're talking about France with the CAC. I understand that this can be a lot, and it can be daunting to a lot of people who are just starting out in terms of monitoring 6 indices. And it's not a requirement for anyone, of course, who wants to succeed. You can simply just monitor these things by just taking note every single day of the open and close and the highs and lows, and that's it. Because from there, you're going to be able to see exactly where the market wants to go. You can see that we opened, let's say, for example, we opened 3824, and we sell all the way down to 3724, right? And then all of a sudden, we happen to close at 3840, right? And now when I go back and I read my notes, I can simply look and see that, okay, well, if we opened here, went as low as there, and closed here, then I can understand who's trapped. I can understand where a lot of the momentum is coming from, and it's coming from beneath. So theoretically, I should just look at that and understand that we should go higher, right? And I can do that across all the different indices, right? I see that pattern repeated all across 6 indices, now all of a sudden I know that this is a bullish market, and vice versa. If I see it happening in Europe and I see the US doing the opposite reaction, then of course, kind of like this week, I'm able to understand that one is a trap and the other is not. And by experience, I know that Europe is very much honest and that they do not lie about their price action. And this is the action plan. I think I have another action plan continued. So the other action plan is measure measure the index close and their open prices on the next day. What I say by measure, I mean, is take the amount that the open and close is measured by. A lot of times you're going to come to find out that it does fall in line with your 2, 4, 5, 6, and 9, 4 key numbers. And that right there, the more you start to see that, the more you start to see the market's going to move a predetermined amount, only on the simple fact that this is a fixed market, right? And when you understand that, you can understand, okay, I understand that 3724 is going to go to 3824. And now, who you are as a trader, you must determine at that point, because you can go long at 3724 and set a stop of, let's say, 20 points, like I mentioned, put $100 risk on that trade and walk away, right? And in hindsight, you would have been right last week, right? If you're the kind of trader that has a family or you just happen to be busy this week, if you put on that 3724 trade, you go on the rest of your day, week even, and you're up 100 points. And that simply just comes from the fact that you're able to recognize that the market is not bearish because Europe is not selling, and that all you have to do is just simply find the support and the level. And these are things that I'm going to go ahead and talk about today. So you're going to find at the end of this is that we're not going to go into every single detail about the matrix principles, and rather instead, we're going to talk about key parts that will help you as a trader just kind of be able to enter the market at the right time. And this will, of course, impact your trading all across the board. It'll impact your trading when it comes to options. You'll get into options that will, of course, suffer less time decay. And that will allow you, of course, to then not have to break even on the trades, even if it runs 10% the next day, only in the simple fact that you got in at the wrong time. At the same time, by understanding how the market moves, you're kind of able to ignore a lot of the noise. And you guys saw the difference between the matrix chat and the general chat and the VIP chat, and how we were able to understand exactly what was going on, ignore all of the noise and all of the PR, the headlines that threw out there. And at the same time, at the end of the day, we were right. The market reversed and there's a trap. And now we have a weekend where they're probably going to get it even worse. Time check. Let me take a look. We are Jumbo. How are we doing on time on the recording? Don't think you can hear me. Jumbo, can you hear me? Oh. Okay. You want to go back to you can screenshot, of course. Yes, Bravo. Go back one so you can screenshot. No problem. All right, no problem. Bravo, Jumbo stepped away for a second. Bravo should have screenshotted by now. And next. Now, tools. Like I mentioned, I am not asking you guys to go out and purchase some $2,000 machine to be able to understand the market. So it's really going to come down to two things: your memory and just being able to recognize certain patterns. By levels, you can memorize levels as well. I know a lot of people, it's hard to kind of put all these numbers in your head, and that's why journaling will be important. By simply journaling, you can, of course, have these levels right next to you and just simply look at the levels, look at the time, put the context together, and execute a trade at the right time, at the right price. And more often than not, putting all of those things together, you're going to find winning trades. And I think a lot of you guys were able to kind of demonstrate that all week. And so that's the goal of this class so far. Now, as you guys continue to memorize levels, you're going to find one thing, is that you're going to find that levels react differently the amount of times that they're touched, right? So let's take, for example, 3724. the way that I see 3724 is we went down, we touched that level one time, and it was never seen again, right? The next sell-off that came the next morning after Friday morning, we sold, and I think we went to as high as 3730 XBX, right? And that right there is something you guys are going to have to realize, is that the more you get confident with your levels and the more you get confident with these tools, you're going to find that the first test is always going to be the best test, right? And that the second test is always going to be the worst test. And the reason why is, of course, you need to think, who's going to be buying that second test, right? The retail trader is scared to buy 3724. But once they see it working, once 3724 comes back around, then you know who's going to be buying that. And it's an easy path to 3694 after that. And so that's why they don't let it touch again, because that they save that for a future thing. They save that for a future event, right? And that's something that retail traders don't do. They don't jot those little nuances down. So say, for example, we move to 3924 next week. If there happens to be a sell-off at that point and we come back down, I can tell you right now in advance that I will not buy 3724. Because I know who's going to buy 3724, and it's going to crumble. It's going to crush right through, and it's going to go to 94. In fact, it may even stop at 84 because MM law, right? They're going to fade that first initial buy, and 3684 would happen to be the next stop for the buy. 3684 falls, and I'm looking at 3656. Same thing with them, 3624. So you guys can see that a lot of these things don't have to be thought out too, and without too much complexity. You can really just think about this, and when you use logic and reasoning, you can really come to find out that the market is really just a game of odds and pretty much psychology, right? Who's going to buy this level? If it's retail, it's going to get faded every single time. And so you need to understand, psychology between these levels as well. And to really get that, you need to write down these notes, because that's how you're able to kind of distinguish what exactly is happening. So yeah, that's just a note out there. Next time you see 3724, do not buy. You probably would buy because, of course, you think key level, you've seen it as support. It's not going to work. And that's something you can just jot down in your notes as well. Just kind of that example, because you're going to see that come into play every single time. That's exactly how the markets work. You can also memorize times. I think Reverse made a key indicator. The key indicator, I think it only works for TOS, but you can write those times down, all those matrix times, because those are all times, and they're not exactly rocket science, right, guys? Like, if you look at those times, you can simply find out that 3 o'clock is the European Open. Right, you can find out that 9:30 is the U.S. Open, and you can find out that 11:30 is the European close, right? And these are all key times, because now you're having all these key markets, right? We were only focused on 6 markets, or 6 indices, I should say, right? And now we need to be able to understand when they open and when they close, right? And these are things that you're just going to work out for you, because when you're able to understand Europe better, you're going to find out that you're going to completely own the U.S. market. And I think I'm going to show you guys an example of this right now. So let's see. Let's take a look at this guy's real life example. And I'll show you here now. Let's go to Tradeovate. So one really cool thing about Tradeovate is the simple fact that you're able to go back and do market replays. And that's awesome for anyone who wants to go back and kind of just really look at price action. So right now we're talking, what time is it? This is the 9 a.m. candle. Hide. This is the 9 a.m. candle, I believe. Yeah, correct. And so what you're seeing here is the U.S. market, of course, is pumping. And at this point, if you guys remember, I think I mentioned in the chat that if we pump going into the open for US, we will absolutely dump. And it's not rocket science, right? Because look what we have up here. We have the ES, and you see what ES is doing. Let's just go ahead and click right here on the FTSE. right? We see who's pumping in the market right here, right? And it's not that these guys are gonna cross here. See if they can just stop locking in. Yeah, oh, okay, doesn't matter, whatever. All right, and you can see that the FTSE right here is pumping. In fact, it made a new high right here at the 9 o'clock time. Let's get rid of that. It made a high right here at the 8:30 time, and this 9 o'clock time is actually just fighting just to get over it. If it doesn't close above this high right here, it more than likely takes a relief sell, of course, before it gets higher. Now, put that into context with what this trader is thinking as a retail trader, right? He's thinking, okay, well, we're going to move all the way to 3,900, right? He sees that the reversals, of course, has already happened. He hasn't factored in the fact that this move has already happened, and this is almost 100 points of a move. If you bought here and aren't thinking about taking profits up here, you're pretty much a greedy trader, and you deserve the move that comes back down to you, right? And only in the simple fact that, come on, guys, this is definitely greed here. And what you're going to see is that at the 9:30 time, let's go ahead and change this. This is 9:05 at the moment. Let's stop this. Let's get out of this. Oh, it's been running too fast on Google Chrome. And let's go to the 9:30 open. You guys are going to be able to see exactly what I was talking about at the open. And this right here speaks about the context of time. Because a lot of times, a lot of you guys are buying calls here, right? You've seen this move. You've seen Apple's up 2%. You've seen Amazon is up, 1%, and you start to buy without context that these guys have already started their relief rally, right? Like I told you, these guys needed to close above here, and they made an attempt, and they couldn't, which means relief. What's happening here? You're seeing that who's buying this? This is all retail pressure, because the market is looking to, of course, then drop, right? What you're finding out here, this is all retail buyers. And at this point, it's 9:33. And we will come back to this to see how, of course, this plays out. And we will come back to that in a second. Let's head back to the material. All right. So, core principles, price action. So price action is the movement, of course, of a security or indices price action or price over time. What you guys are going to find out is that the retail trader looks at numbers in very, very simple ways. You're looking at 0025, and I think I have that up on the next slide, 002575 and 00, right? And you're going to find that, of course, using this 2, 4, 5, 6, 9, 4 method, that you can very much, by looking at the price action, feel support and resistance in real time and be able to draw key levels that are preventing, of course, the other indices to fall back. And so I gave you guys the visual, of course, with the elastic bands with Javon, Jumbo, and I running a race, right? And we're all connected, and we can only go 10 feet apart from each other, maximum, right? Say Javon, of course, starts to run and he's at max 10. If Jumbo and I don't move, the likelihood of Javon returning back to us is almost 100%, right? And that's just how the market works. And so when I see the NDX run 2%, I see SPX hold at 3824, and it doesn't move, it doesn't budge at all, I can fade the NDX unless it keeps surpassing, of course, more and more 2, 4, 5, 6 levels. I'm very confident that I can fade the move in the NDX only off the simple fact that SPX is not moving. And so you can even zoom in on a shorter time frame and look at between 3861 and 3824 and use 2, 4, 5, 6 to kind of understand how that nuance works. And this is something that you're only going to get better at the more you continue to watch, right? And put the time in to kind of monitor that price action as it plays out. Let's head back to here. Let's see what's happening in the markets at this point. Let's see. Oh, trade bait. All right. Perfect. So at this point, US is dumping. I don't think anybody is I don't think anybody is surprised, right? I don't think anybody's surprised that the market is exactly dumping here. Let's hit play. Right. You guys are looking at the market is dumping. People are thinking, oh my goodness, this is a sell-off. Look what's happening in Europe, right? They're barely reacting, right? And it's a simple relief rally for them. And if you really think about when the US turns, just think about when we normally turn and, you know, our key time. You know, you have the morning dump, and of course you have the afternoon, and then you have the, you have the early morning pump, and then you have the afternoon dump before reversal into end of day. But if you're not looking at context, you already see that this rally has already happened on the FTSE, right? And so if they're going through their rally, at some point they need to take their relief rally. Their relief rally just happens to be timed with the US. And so what do you have? You have the trapped buyers up here, and then you get the fade. And now with all of that momentum and fear, where does that take you? It takes you all the way as low as 3730 before, of course, we reverse later on in time. So let's see, let's actually speed this up. That's what we need to speed up a little bit. And we will come back to see how that plays out in a little bit. So let's head back to our material. So now back to time, and you guys are seeing time used in very much in a real time format, right? You guys are able to kind of sit there and understand, okay, right now it's 9:30 a.m. In about 1 hour, I understand that the market is going to make a key change, right? And it's pretty much you don't even have to trade that first hour. You can just simply wait until 10:30. Once 10:30, of course, that time comes around. Now you as a trader can step in and of course, you know, execute a trade. And by executing a trade, it's as easy as just looking at what exactly is happening, right? I think we have some. Okay, all right, we should be good there. All right, so let's head back here. Let's see what's happening in the US at this time still, all right? So the US is still selling. At this point, it's 9:45, right? And of course, it's just gonna keep happening. Let's see what's happening in Europe, right? And I think at this point, I'm telling you guys that, hey, look, this is not bearish at all, right? Let's take a look at the opposite price action. Right, these guys are relief rallying. They're just they're dipping, of course, to get some relief. And the U.S. trader is literally losing its shit to the point where it even goes down here, right? And this right here is exactly when you get the news dump. This is when you get the downgrades. This is when you get the Trump is going to do this or Biden is going to do that. Democrats are going to do this. Republicans are going to do that. And everybody tacks on, right? And at this point, it becomes a snowball effect that even simple logic can't even revert this price action, right? The momentum becomes too much. And at this point, supports that are in place start to fall out, right? And at this point, it's almost 10 o'clock, right? And so we're going to come back to see how that plays out for those shorts that are shorting the market right now. Next is context. Right, we're talking about context, and I think this here is the best way to look at it, right? If I trade euro, I've already understood that this is bouncing, or this is a bounce from, of course, these key supports, and it bounced. Boom, it's in a rally, right? At this point, this top end of a rally is taking a relief. So I'm able to just simply use that simple context and look back at ES and say, this here is a fake move. And all that I have to do is either decide, is it going to stop at 3777? No. Why? The momentum is too much, right? You have to think about the retail trader at this point. He wants to buy here. 3756, possible, right? But with this much momentum, look at this candle. Look at this candle. If 3756 is tested, it probably cracks. The next level is 3724. And of course, again, we're going to see how context saves us from shorting this move. Granted, would you wanted the short? Yes. But the risk here is you don't get this move and you get anal right here. And that happened at the end of the day, right? And I talked about that. And it was just a time delay between that move to the end of the day and the morning right here. So the risk was there. I kept telling everyone, don't short, don't short, don't short. You can scalp short, of course, down to support, but at some point you need to get out of this. And at this point, it's almost 10 o'clock. So let's go back and let's take a look at more context. So taking a look at the bigger picture, this will be key to drowning out noise, and this is done by comparing support and resistance across indices and global markets. And this is a perfect real-time example. Guys, look at this. It's already done a rally, and it's sitting here, right? It probably goes even lower here. I'm not exactly sure where it heads, but this is not bearish. If this happens to, of course, now go back and trade through support, then it gives validation to this, of course, upcoming move. But this move is a fake out. And all you have to do is simply wait, right? And it goes back to what we talked about here, right? What's the core of all of this is just patience. And you see how that played out on Friday. So let's move on to the next step. So right here, global markets, how and why the markets move. The market moves not because of anything that you've ever heard before, but only on the simple fact that these exchanges are opening and closing, right? They're opening and closing. They have their own set of buyers and they have their own set of sellers. And this is what essentially moves the market. Now, do all of these indices actually matter? No. I don't think that we care too much about what Budapest does. Actually, no, their exchange is pretty big. I picked the wrong one. But let's say Budapest, for example. I don't think that we actually care too much what Budapest does. But it does at some point have an influence in the market. No matter how big or how small, it has an influence. And this is the reason why the markets open where they do, the reason why they close where they do, for the reason why you have a gap down, the reason why you have a gap up. Every single action, every single part of the market operates from this right here. And the more you understand that, the more you're able to drown out and tune out a lot of the noise that you get. Because bearish US news does not have to be bearish London news or German news, right? And you can see that as examples of all last week, right? You had missiles sent to Syria, you had coronavirus mutations, you had stimulus package issues, and all of the sorts, right? And look how we closed the week. So that's one thing you guys need to understand as well, is that news is absolutely not a factor. And of course, there are times when news can impact the change in a market, but it's not that the news itself is the cause. It usually happens outside of our key times. And this is when you can think about why, right? Because that move is almost always faded, right? If it happens outside of our key time, it's more than likely going to get a fade, right? We don't trade China for a specific reason. China is very much a bearish market, or bearish-minded market, I should say, right? And so any bearish news that you get during China is going to follow the news. And that is exactly how it plays out. And so when I say don't trade China, it's not a bias or it's not anything. It's more that the market is going to react to the news. And even if your price action, if your theory, if your context, and it's all correct and you're right, you're still going to get hurt before you get right. So keep it simple and don't trade China. And best example is when we bottomed during the initial dump last week. We bottomed at midnight, the first key turn, which is a change of day, right? The reason why it's key is it's a whole new day. And if you think about computers, think about how a computer would operate between Thursday and Friday. It sees Friday as a completely new day, right? Well, the completely new algorithm has completely new numbers in mind, has completely new levels in mind. And so you guys need to be aware of those times. And so these are all the reasons why we have those key times that are listed in the matrix, because it keeps you from kind of diddling in the middle in terms of price action and in terms of time. Because I can guarantee you that you're going to catch anal before that 11:30 time. You're going to catch anal before that 2:30 time, and you're going to catch anal before Europe opens and you're in the Chinese session. And these are simply because these are times when the market, so you don't have a key market cash open, right? And that's why we have Europe, and that's why we have US, and we don't trade outside of those zones. So if you have any questions, definitely throw them in the chat. I know this concept can get very more complex, but I mentioned that this, I know we have a room full of different kinds of traders in here. I know some of you want to get completely matrixed up. And I know some people just kind of want to learn futures because they understand that it can be a better alternative in certain scenarios than options. And that's what I'm here to offer to everyone here, just the general concepts of how the markets work. And then, of course, to the matrix heads out there, we can talk about, of course, detailed and complex theories and more about game theory later on. But I really want to make sure that you guys walk away understanding just keep the key terms in terms of understanding when the markets move and why they move, right? Because then you can carry this information forward and be able to make better trades. And if that is one thing that I can get out of every single person here, I will be happy. Of course, I would be happy to turn all of you guys into super matrix heads that can only dream in numbers. I mean, this thing gets crazy, right? Because I see this entire list here, and I can pick out 2494, 249456, and it gets weird. It gets really weird fast. Let's see what's happening here. It's paused. It's 10 o'clock. It's paused. Where are we headed next? Okay, so this is 10 o'clock time, right? It's not anywhere. We're reaching the first hour of our day. In 30 minutes, it's still not a tradable time. Buy the dip, right? So this is retail, right? 30 minutes into the session, 10 o'clock, what do they want to do? They want to buy the dip. And this just is not going to work out, right? The dip buy does not come at 10 o'clock. Dip buy can come at 10:30. It's very unlikely. Why? Because Europe is closing in an hour, and there's no reason to make any decisions before a key index happens to be closing, right? It tells you a lot about what's going to happen next. So why try to guess what's happening next when you can just simply wait for the confirmation? So here are the gamblers. We're going to come back to see how how life works out for the gamblers. At the other end of it, let's see what FTSE is doing, right? So while everyone is panicking, what are you doing, right? Knowing all of this information. You're simply just taking a look at what's happening here. Even DAX, right? Let me change this. I don't need this right now. This is not a candlestick, right? This is DAX. Change it from this to 30 minutes, right? DAX didn't have as much of a run as FTSE, but this is not bearish, right? It's coming back down. It has some support down here. It's even here. It would even be bearish if it came down here, right? It would just be simply a doji day, right? There's a balance day, right? A day where you didn't really have any action to the upside or any action to the downside, and it happens to just balance where you opened, right? And so this is exactly how you can put context together. And mind you, we're only looking at it between intraday, right? And this right here is for the day trader, for the scalp trader, someone who wants some action or context that comes from the real-time moment. If you're a swing trader, you're probably going to be looking at the daily, right? And you see that DAX had its sell-off, and is now refusing to sell below these levels. So you can mark these levels as the key level and say, okay, if DAX goes below this, we probably flush. But DAX hanging out around here, and I think I was mentioning it in the chat as well. DAX up here and its all-time high being like right there is very dangerous because, I mean, the most dangerous equity or the most dangerous thing about any kind of market is one that's near an all-time high and won't fade, right? Because you're probably going to make a new all-time high. And that's the danger that I was sending out to anyone going short, is that at any moment, if this thing rips 200 points, I mean, ES is going to absolutely just move. And so the dip buyers, they're doing well so far. Still 10 o'clock. They're probably going to get more formal buyers. Let's see how that plays out. 3797 here. Let's see what they can get done. Let's head back to the presentation and let's get to some visuals. So I know a lot of you guys are visual learners, myself included. Visuals really help me kind of understand how the markets work. And so this here's a message that I sent to Jumbo a while back that really kind of resonated with everybody in the group. And it really comes down to these elastic bands. And you can choose to look at these elastic bands however way you want, right? You can see them in 2, 4, 5, 6, 9, 4. right? And they can work like that. You can see them in SPX, NDS, and NDX and RUT, right? You can see them in just the European markets alone, CAC, FTSE, and DAX. Or you can choose to see them as the 6 indices all together, right? And this is where, you know, advanced matrix theory comes in, is when you're all of a sudden put all of the tools that you would use into one index, now applying it to every single index, and then now on top of that, putting together a story using all 6 indices, right? And you can see how that can, of course, help you in a market where there's a lot of fake outs, and there will be a lot of fake outs this year. I think that we're just beginning to see a market where you're going to get a 100-point dip and a 200-point rip. And I think we're going to start to see that trending all year. And so while we continue to wait to see how this plays out for the US market, let's head back to, there are no questions so far. That's fine. And we'll head back to the presentation. And so back to this example, this visual, right? And so let's say, for example, we're just looking at a focus on the US market. If I see NDX run and I see SPX run and I see RUT hold, and I think you guys all saw this in real time with 2252 last week. RUT was stuck at a level of 2252 and could not and would not get above. Meanwhile, SPX kept running and running and running and running, and NDX kept running and running and running and running. I think all of you guys were able to see what happened after the fact, and you saw that the market completely dropped. I think at this point, SPX is about 3894, 3900. And obviously, you know that the market dropped almost 150 points from there. Is that to say that every single time RUT puts up a resistance that anything is going to happen? No. All it is telling you is that whatever move is happening right now with the NDX or the SPX, it just happens to be too early. And that's one thing that you need to know, is that a lot of times it seems like you're predicting the future, whereas you're just simply putting 2 if-then statements together and going accordingly to plan. And of course, a lot of times when you do so, you can lead and catch a bigger move, right? I think before you guys all got on the call, I told Jumbo that 3724, sure, it turned out to be that key level, but it could have easily been 3694, right? And it wasn't our job, it wasn't my job to guess which support was going to come into place. I just happened to know which key numbers are going to come up, right? I had the levels written down, I have them memorized. And so I know below 3724 is 3694. Simple. I buy 3724, I set my stop. If it breaks, I know where the next level is going to, right? And that's exactly how you play it. And the reason why you can do that is simply because if we go back to here, I mean, here's FTSE, right? Not only did it just dump, it did this, and the US is absolutely confused and has zero clue what to do. It's already given back a lot of gains overnight. We have the dip buyers, and I don't know why it keeps pausing. I think it pauses as I leave. So I'll leave that sitting up right now, and I'll let this sit. Another thing as well, if you guys are anybody's into track or sports, definitely this example was something that I think will help a lot of traders as well. Is the 4x4, the baton race, when it comes to track runners, right? You guys understand that this runner here cannot move until the runner behind him, of course, then passes him the baton. And so if you have a set list of levels in front of you and you're looking at SPX and you're looking at RUT and you're thinking, okay, well, if this level goes there and this level goes there, well, then you need to think that if I can put 2252, if I can put 2252 here and I can put 3906 here, then I understand that until we get above 2252, then that baton, whatever happens here, 3906, is going to be a fake move because it cannot move until the pass is handed. And so you can kind of visualize exactly how, you know, each market's kind of waiting for another market's confirmation between levels. And until it gets that confirmation, any move outside of that is going to be a fade. And it does not take much outside of that. You guys will find that I try to make this very simple because I've come to find out that the market is a lot simpler than what people come to understand. I think a lot of times by allowing all the noise that comes from the outside, is where you kind of get messed up. And I think, again, last week was a perfect example. And I think it's a perfect time for us to start these classes because you guys were able to see the difference between a trader that's kind of only looking at objective measurements and a trader that is solely dependent on kind of the news and kind of the day-to-day of what happens. So what I'm going to do here is I'm going to go ahead and change this to 11:26, right? So let's go back and let's now look at when the market bottoms, because I think this part is really, really key for what you guys want to see here, right? So of course, you see that the trader at 10 o'clock has gotten destroyed, and the 10:30 trader has also gotten destroyed. 11:30, or the 11 o'clock trader has also gotten destroyed, and we're now coming to our first key turn, right? What's the low here? The low is 3730. Why? Because what's retail trader expecting? They're expecting 3724 SPX, and this low happens to coincide where? This 420 time, right? And if you think about this right here, if our important time for US is 1 hour post open, then where would also be the important time for the European market, right? And then now think about this even a little further. FTSE and DAX open at 3 a.m. Eastern Standard Time, my time. CAC does not open. CAC does not open for another 30 minutes. So 1 hour post FTSE time is 4 o'clock, and 1 hour post CAC time is 4:30. So it's not a coincidence that here, this level that was generated here at what time zone is this? This is this bottom here. It's not a coincidence that this level here that comes in at 4:20, almost 10 minutes after, or 10 minutes before the first hour mark for CAC first hour open, happens to also coincide with the bottom in the market for when CAC closes, right? Because now once we go ahead and we mark, or we go ahead and hit resume, here we go, our key time, 11:30. And I think you guys know the rest is pretty much history, right? Because now after seeing this, retail has gotten anal 3 times, right? Dip by once, boom. Dip by twice, boom. Dip by 3 times, boom. Actually 4 times. Dip by 4 times, boom. They're not buying this at all. And I think you saw that in the chat as well, as you saw some traders also mention, I don't trust this rally. I don't trust this. I don't trust this. But meanwhile, look what's happened to FTSE. It's done this, and it's fallen down, right? And it's done its relief. FTSE has not closed bearish. It's relief rallied, and now it's going to go ahead and head higher. And of course, now the US will respond to all of that positive price action to the point where we close all the way up here. And let's go ahead and switch to our next key time, which is 12:30. Right? And let's go ahead and just focus more about time. And you guys can see here, you don't need to understand much about the market, right? Let's say you woke up super, super late and it just happened to just be 20 minutes before this 12:30 turn, right? And you see this is a candle here. I can just open up the market, see that, okay, well, we sold off and we bounced. So it's either we're going to head back down here and form this W. Remember the W that I was talking about last week. So this was the time to enter the W. Because as time continued to go by, remember our golden rule is you never short until a Friday close. So the more we went this way, and the more, of course, time passed by, the less likely that this W was going to form. Correct? And so, of course, this was the time for bears to, of course, go ahead and make that turn. Does it happen? No. And by being a trader, right here is where I would have entered a long, and I would have stopped out, break even, just in case they went against me. I might have set a 10-point stop and just watch this momentum carry through, right? And of course, as you can see, if I can go ahead and just skip this again, I take you to the 1 o'clock time. Let's see how that would have worked out for you as a trader. 13:20. Perfect. Right? At that point, boom, you've come in, you place a trade, you put 10-point stop, right? So it's 3781. You put a 10-point stop, you risk $50 on 5 MES, and you only ever come in between 4 points of a loss, right? So it doesn't hit your stop, it reverses, and now you've collected almost 10 points, right? You've almost collected almost, actually 12 points at this point, right? And you would have already maybe banked. If you didn't bank, maybe you stop at break even, and let's see if it even comes back to your break even. Well, not your break even, your stop loss, I meant. At this point, you're pretty much just watching, and you're comfortable here, right? Because if it happens to hit your stop loss and continue through, you understand that, of course, you're probably going to head down here. And by theory, you understand that this is not going to play out as support, and that this is also not going to play out support. So your risk to reward from here, if this happens to be a reversal, is very high, because you're almost looking at 3694 to come in as your your target price, because you understand by theory this will fall and this will fall, and below 3724 is 3694 as a target. But of course that doesn't even play out, because we never even reach your stop, right? We go as much as your break even, and we reverse. We can now fast forward to our next key time, which is 2:30. And I mentioned that if 2:30 wasn't, if 2:30 didn't turn out to be the absolute stop for bears, that this was going to get very, very bad. And let's check out 2:30 before we head back to our presentation, right? So now let's take a look from 12:30. You're now, from here. You're now from 3781. Pretty much almost up 50 points right here. And you woke up late, right? Or you haven't really paid attention to the market, right? You're only trading key times, right? So let's say you don't trade this 9:30, but you trade this 11:30. You would have had a lot of reason to buy the dip here. You would have had another reason to go long here, right? And this 2:30 time here, same thing. You know the rule, don't short until Friday close, right here. So we're headed to close, don't short. You can just hit buy. And I mean, the market kind of just does the work for you at that point, right? It goes on a rampage. And from here, I think the entry is 3818. I think we hit as high as 350 or 340 that day. So this right here, I gave you guys some real-time examples in terms of like how this is going to work, because you can really pick out times where, the market is going to move and use that to your advantage. Let's see. Some questions here. All right, perfect. Yeah, guys, don't worry about that. Actually, I will be taking a look at the questions part 2. So if I can hop in, tech savvy, yeah, I can definitely take a look at your questions. But I definitely want to continue with this part as we run out of some time. Actually, no, we're doing pretty good on time. All right, next, let's head to the next part. So another helpful visual is for momentum. So this is going to be perfect for you guys, right, when it comes to swing traders, because I think I talked to a lot of you guys, and you really would like an environment where, you kind of don't have to worry about all of this, right? All of this day to day. You would prefer to be that kind of trader and just make this one trade here, boom, and see this movement, right? And it's very much possible. And I think I've shown you that an entire week, because swing trading is probably the easiest and the laziest form of trading, because it starts out with first just pretty much watching and waiting. And remember, if you went long here at 2:30, our key time, you would have just ate, right? You're just banking, right? But now, mind you, if you would have went long, if you go long 30 minutes before our key time, look how they would have just given you anal before reversing you, right? You would have went long right here, you would have stopped out right here, it would have reversed, and it would have just hit you in the mouth. So really stick to these times, guys. You're going to find out that your trading is going to become much, much more efficient. You're going to find out that you're going to be right more often than not, because again, if you just list out these key times, you can really just look at the market and just say, okay, well, it sold here, 12:30. It probably does continue, right? It probably does continue. And I give you shapes already. So if it doesn't continue, you know you have a target, right? You have two targets for a W, right? And if it does continue, then you're probably looking at a V. So if you went long here, you're probably really cheesing right now. You're up almost 50, going on 60 points. If you went long here, you're almost up 100 points. And up here, I mean, eventually you almost get 130 points from here, right? And so I pointed out different places and times where you guys have now been able to, you know, carve out these points for yourself. And it's really, the truth is in the pudding. And this is not with any indicator. This is not with any additional product. This is simply just trading with the market, trading with time. And this is very key to what you're going to be able to do. And so when it comes to momentum, that's what I was talking about just now. Momentum is going to be key, because think about this. We go from, let's say this is the range. This is the range from 3806 to 3721, right? From the top end, from the previous low to the next high. This is the range. So when you see this selling happen, the bears better prove it and take this out. Because what's going to happen more than likely, the moment this basis, why it gives you, and that's why I keep saying, that's why I give the link to swing traders, right? Because I'm comfortable going along here, because at the very least, I'm going to get a reversion to the mean, right? And I'm comfortable going along here the moment that I start seeing some buying come in, because I'm going to get a reversion to the mean. And it comes simply with momentum. And if you guys have watched tennis or ping pong or any of these sports matches, you can see how momentum actually changes in the game. Because this guy, he hits the ball here, he has to wait to see what this guy serves, right? The moment he returns the ball and it goes here, he has to do the work to return this ball here. If he's still stuck here and poorly positioned, all it takes is one good hit of momentum to catch this guy off guard. And that ball now can all of a sudden pass through and he loses the game. And so think of that between, you know, momentum, that kind of visual when you think about the market, because that's exactly what happened here. You smack the ball, catches the ball, it back to you. Now that he has the momentum, it's hard for you to kind of keep up with that, because now think about this. You brought all of these sellers that are wrong and now have to buy up all of this incorrectness. On top of that, you get all of this buying. What does that lead to? You crush the high, you make new highs, and you get to the next resistance point. And this is how the markets work. And you've seen it play out at only key times, right? So think about how easy the day you would have had last week. You woke up, you saw the market dip. You checked next time at 10 o'clock, 10:30, see buyers came in. What happens to those buyers? They get wrecked. You're like, okay, I'll come back an hour later. An hour later, it's 5 minutes, and you see that the first level has been bottomed out. Then you start to see that this next candle comes, and we don't even bring price back low down here. You probably don't buy here, honestly. A lot of you wouldn't, right? Maybe DGens like Bravo probably buys here. Most of you probably buy here after seeing this upward movement, right? But even by buying here, you are so right. I mean, just look at this, right? You're right, and it's not even close. And compare this to the work that's done on Twitter by all of these people who claim to be super geniuses and all these different things. You didn't do anything besides wait for your time and hit buy. And you didn't hit buy out of anything other than the fact that you saw that this was green. You know, okay, well, this is green, this was red. I'm probably going to hit buy and see what happens and set a stop. Next thing you know, you're up 10 points. Maybe you set the stop for break even. Next thing you know, you're up 20 points. Now you set up a 10-point stop just to protect those gains. Right, you're up 40 points, you move the stop higher. You're up 30 points, you move the stop higher. You move up 40 points, you're up higher. Now, this is where I was referring to when I was saying that is if RUT could not get over through 2177 over level, that this would also see a reversion, or at least a halfway sell-off or pullback. The reason why is this person here is setting a trailing stop, right? He's setting a trailing stop. And so if he sees that, momentum, of course, then reverses, it's not that he's bearish, but he's taking his profit. And all of those profit traders now all of a sudden form this right here, right? Before it reverses back to negative buying. So it's really important that you understand exactly what's happening, because if you don't, you're always going to lose, right? And here's FTSE coming in at the close. It dumped its close. And what does it do? It bottoms in at the close and it pumps it to its futures market. So that right there is a real-time example of kind of price action, and price action in time, and how it's used and how it will always be used against you as a weapon. And this is just how it works. Right here, this is the China time that I was referring to, guys, right? You take a look at this, it just dumps, right? It just completely just dumps. And this is when everyone comes out, they bring out their news, they're telling you about the missile is this, the missile is this, and it's already bottomed at this point, right? So let's move forward. Take a drink. So this here is, of course, matrix times. I think I put it in the chat. Everyone, of course, has these levels. This is a screenshot from, of course, that move that we made. And so I showed you this in Tradeovate. This is what it looks like in Thinkorswim and how it's broken up. I think Reverse made this indicator that kind of breaks it up. So if you guys have, you want to be able to see this visually and, be a visual learner, I would definitely check the chat. I think we have links in there that will kind of just put this up for you. And just take a look. You would have just opened, you would have waited, you would have saw here, waited for the reaction, you would have bought the dip perfectly using time only, right? You would bought the dip, you would have bought the dip, and you would have been up all the way up at 3840. So we can skip this part as we just went over that in detail. This part is going to be really, really important as well. So all of these markets, this is what the human wants to do. 00257500. I should have put 00 there, but it actually should just be 00. Right? This is what the human trader wants to do. They want to look at 002575 and 00. Right? And so this is what I mean by levels, because this is what the retail trader will see. Right? And if you guys think I'm joking, these are literally thoughts that will just naturally happen, right? These are thoughts that will just naturally happen inside a trader's mind, right? It could be 7. Actually, no, it's 7.5. That's why. There we go. 2,500. Yeah, I know some bidders that are out there. 3,000 spirits, right? These are levels that, these aren't any key levels or anything like that at all. But I can tell you that retail is going to have a reaction at every single one of these levels, right? This tells you, oh my goodness, it's a flat, even number. We're good to go. This tells you, oh my goodness, we're halfway there. So when a retail trader sees this, I can tell you what number that they see. Right? This is what Bravo sees, guys, right here. Right? When they see this, what are they seeing? 3,000, even 5,000, right? You think of double, right? When you see this, you think 3,600. When you see this, you think 2,000 or 4,000, or even 3,500. Right. This is this is exactly what the retail trader sees, right? And these are all numbers that are going to get faded. So let me just give you a helpful tip right now. This right here is going to be in the minds of a lot of people. This is going to be an easy fade. Right? Because everyone, right? CNBC is not going to help at all. Everyone's going to talk about SPX 4000 whenever the time is right. And I could be wrong, but I'm going to fade that, and preferably with two hands. Only because I know what the traders, I know what Gen Chat is going to say. I know what VIP is going to say. Only because I know what I would be saying, right? And that's why it's really important to really understand who you are as a trader. Because if you are that greedy trader, then you know what the greedy trader wants to do, right? If you are a fearful trader, then you know what the fearful trader is scared of, right? And so the better you understand yourself, the more you're able to understand points that the market is trying to pull at. And so that's why it's very, very important that you understand what your goal is every single week when you step into the market before you're even making a trade, what your personal goal is. When you understand that, you're able to drown out a lot of the noise that comes from what the market, of course, then generates. Next, matrix times. This is important, and I think we're going to see this into play next week. This is a perfect example of how the market operates here with this picture. With this picture to your right, what I mean by that is this is exactly what I mean by these key times, right? So you guys are looking at a clock that shows you 12 o'clock, New York time, 4 o'clock New York time, and that's it. But this is a global market, right? And there are international participants, and price reacts to what New Zealand opens and closes at. It reacts to what South Africa opens and closes at. And so these are things that people are not aware of. If you're not aware of these things, you look to blame, or at least give a reason to it with other entities. Things like news, things like maybe perhaps the Will Mead indicator, whatever that is. These are all things that you guys are going to come to find out that the market does not move the ways that the natural person thinks. It moves only for these reasons, right? And the reason why the price dropped 10 points at 10.23 happened to be because New Zealand market dropped 30 points into their close, or they opened and they got down, right? Now all of a sudden SPX falls 20 points. Retail is tripping out, right? They're going crazy. They're thinking they get puts, and then New Zealand reverses, and the market's back up. Now, do we care about New Zealand? No, not at all. It would be crazy, and some people can get crazy. And there are people that do this, and they study every single market, right? These are traders that probably don't get much wrong because they understand every single ebb and flow to the market, right? They understand why this is moving. They understand that this is because of South Africa. They understand that this is because of Australia. And they're able to kind of give meaning to all of that throughout the market. And that is extreme. And I mean, that takes years and years and years of practice to kind of get to that level. But sticking to the 6, you're going to find out that these are the only important ones that you're going to need to focus on, and that this is exactly how the markets work, right? And the reason why the U.S. always suffers is that, and the reason why the moves happen overnight is because the exchanges, right? None of these countries have the time zones that operate in line with the U.S. market, right? So while you guys are asleep, or the natural retail traders are asleep, all of these markets are opening and closing, right? Or mostly just opening, right? And as they're doing all of these, making all of these set movements, by the time that it gets to U.S. Open, a lot of these traders are closing out positions, right? If we dump, and that's the reason why if we dump overnight, that first move is a relief rally, right? Because all the shorts that were right in their international markets are now covering, right? And that translates to U.S. And then you buy the dip, and it goes well for you up until that first key turn. Why? Because the relief rally that you got came from the international market, meaning U.S. itself has not made its own cash open move. And so by the time that market closes and the relief bounce has already happened in the U.S., and it's time now for context to kind of go into play, and the U.S. dumps, it's too late. You've already bought the dip, and you're crushed because you held it thinking it was a swing, and none of the sort happens. Now it gets more complex, and we can talk more about that in like different classes. Getting very, very detailed. But again, I want to stick to basics for today because it's important that these measures are understood, because then you will trade better, right? Then you will see this next week. You will all see this next week, right? You will all have these times, and you will look at these markets, and you will look at these times, and you will say, okay, wow, the market bottomed exactly at this time. I could have just went long, closed my eyes, and I would have been right, right? And I don't recommend anybody making trades next week. I think next week is going to be a week like we've never seen before, but that's for the chat, and that's for something we can talk about later. So Mondays, you should not have any expectations for Mondays. You guys saw Friday that I told you guys to close out your positions. Close out your positions at the end of the week, right? You're going to do yourself a big favor, because you don't want to go into the weekend thinking about the market. It's already, because then all of a sudden you come into the market and you have a bias. You're not openly accepting the possibility that the market is there to offer you, right? You're short because you need to be short, and you need bearish news, and you can only see bearish things. And so you will get killed by the bull that comes you can't see. So flip that around. If you're only bullish, you only see bullish things. You only focus on bullish news, and you will always get crushed by the bear that you don't see. So a lot of times when you guys see me say many will be fucked, or the Jodito thing, it has less to do with maybe perhaps what I think is going to happen next, and more to do with the sentiment that I see already, right? The moment that I see fear turn into greed, I understand that we are at a point that the market is going to turn. And all that I have to do is apply the price action, the time, and the context. And if it agrees with me, then there's a turn in the market, and it happens to happen at exactly the right time, at exactly the right price, and it gives to as many people. So Mondays, you should not expect anything. If you want to, then it's best that you use context. So like, let's say, for example, if you ask me, gun to my head, like, what exactly do I think is going to happen next week? I would simply tell you that, well, Europe held bullish. We had trap shorts from Monday. Market squeezed those shorts, and we went high. So now you have to now think, okay, well, are there more shorts to be, squeezed, right? To participate in that squeeze? Or is the short squeeze over, and now the new bull needs to improve it, right? And so these are thoughts that I have going ahead into the next session. And I can tell you immediately that I'm pretty sure that China may try to dip, right? But it's hard. It will be hard for China to do so, because China likes bearish news. They like bearish price action, and they will take advantage of it before the Europeans step in. There was nothing bearish about Friday. I think Europe showed everyone what it was capable of. The U.S. did a complete 180. So it's very hard to imagine that come Sunday we're going to have much bearish action. And if there is, then naturally I would be thinking buy the dip. Tuesday is range extension, meaning if you have a bullish Monday, you're more than likely going to have a bullish Tuesday, and vice versa, right? And these are just basic principles, just to kind of just think about it. But there are also like different situations where range extension does not necessarily have to mean in one direction, right? If we are stuck in a range between 3924 and 3956, then we have that range that that's kind of established for us there, between 3924 and 3956. But let's say it was Tuesday and it's a range extension day. Let's say we went from 3924 to 3963, for example, right? So we've extended. We naturally on Monday we had a bullish day. We passed 5-6. There's also a possibility, using the correct context, where that also reverses, and then instead you now have the range extension to the bottom, and 3924 gets crushed, and you get to 3894. Right, and then now all of a sudden that Tuesday does turn out to be range extension day, right? You've had range extended from the upside, and then now you have a range also extended from the bottom side. This is how you know volatility is coming. right? And that right there is a key moment. And so just by simply waiting for me, and I see that the market tops and then it go ahead and it makes a new bottom, I know for the rest of the week that this market has a goal of increasing volatility. And what that means, a reversion to the mean, which means Wednesday, I'm expecting price action to happen a certain way. I'm expecting by Thursday and Friday that this will all be reversed. And if you just heard what I said, take that note down, because I think that is exactly what is going to happen this week. I think you're going to have a bullish start to the week. And of course, we're going to talk about this in the chat all week long. But I'm pretty sure towards near end of the week that I'm pretty sure that we're going to see something crazy. And I have to do my own, obviously, analysis first, but just the way that everything lines up, I can just see, I imagine how everything's going to play out. But that's something we can talk about, later on in the chat room, in the future later on. But that is also kind of like a preview as to like how these classes will go on later on once we get past the basics. Fridays are easy, like I told you. Shapes, V, W, M, and that's it. It's literally, Fridays are the easiest days to trade, as long as you keep, in fact, those price action, those shapes, and just remember the fact that they're also going to turn at the right time, right? And so there's the golden rule: never short into Friday. Obviously, you see that, turn follows matrix times. We had our first leg of the V scenario 1 that happened first half of the day. The second leg came in at European close. And of course, as time went on, bears who continued to short got crushed. Price action, we refer to as price action. Of course, in moving level to level, we talked about that. We also talked about using reference points. So anyone who didn't get a chance to talk about it, guys, you guys can actually use levels of previous reaction points in conjunction with the 2, 4, 5, 6, and 9, 4 numbers to create future levels that will generate a reaction one way or another as support or as resistance, right? And so now think of this: if you're the scavenger or the day trader or the scalp trader, who understands that, okay, well, if I'm above 3861, I understand that the next level of reaction is here. So I can play long above a specific level, keep my tight stop there because I understand what the level is below me, and play the long or the short using that as a pivot and head to the next level. You might collect 8 points, you might bank your points there. You might switch short at that resistance and collect 3 points on the way down before waiting for that resistance to turn to support again, and then taking the next long and moving forward, right? And so this all happens within the ebbs and flows of the market, and that all comes from price action, right? And the levels that you would use to, of course, generate future levels, is, if you want to get into a predictive mentality, is understand that this is not a matter about predicting, right? And think about, for example, last week when you guys saw the sell-off that had happened. We saw that we broke below our 377 super key level, right? And we went down to 3756. Like I mentioned to Jumbo, I would have bought naturally 3756 as support. The only reason why that we did not buy 3756 as support is just the context and the simple fact that we just had a key major support level break. More often than not, the level below that is also going to break. And that level was 3756, right? And just thinking again, all the momentum that we just talked about using that visual, right? All the bulls, they put their energy into a move first, they get smacked by them, they get all caught off guard, and 3777 falls, 3756 falls. But of course, even you guys, like I just talked to you about now, right? You understand the numbers, 2, 4, 5, 6, 9, 4. And you've just seen 3756 fall. Naturally, you already understand that 3724 is your next stop, right? You just understand this. It just happens, it's not even something that you need to look at news article. You don't need to comb through FinTwit. Just like keeping to those simple 3 numbers, you already come to a real-time understanding of what the next level is, right? And of course, early on, you guys are not going to be the group that does the first buying. And this is the one thing that I wanted to refer to you guys again. The first buyer the first reaction is always the best reaction, right? 3724 hits, that one turns out to be the move itself. The second time that move comes around, you who weren't trusting of the first support are going to buy that next support. And the market maker knows that and is going to fade you every single time, right? And that's just a natural, step of the process. Okay. So, and that's the next part that I wanted to talk about next, is the fact that support and resistance. A lot of times you guys never really know, like, hey, look, when is this level going to actually be support? When this level is actually going to be resistance? And that simply comes to the simple fact that you guys are not actually taking count or measuring the amount of times these levels are hit. Because what did I say, right? I told you that the first time that the level was hit is going to be great. The second time, it's always going to fall. Why? Because who's buying that second reaction, right? Whether it's a resistance or a support, it's usually the person who missed out the first time and is looking to catch up with FOMO into that second resistance or that second support. And they're the one that gets faded. The third one is a person who now thinks that they have a weak support or the weaker resistance. And those are the ones that actually turn out to be wrong as well. And this all stems from game theory, right? Understanding what your opponent wants to do or thinks is going to happen next, and then calling his or her bluff, right? Because that third person that sees that support tested thinks, oh my goodness, this is the third time. It has to fall, that it must fall. And that person is also wrong, because then that third point marks a key level of support, right? And so that's just how that works as well. So keep that in mind as we near the close here, guys. Some tips. Next week, try these tips out and see how your performance is at the end of the week. Try to only trade during these key times, guys. You guys are going to find out that this is not a joke. And I kept asking that the entire time, is that like, this is not some sort of idea or theory that works here and there. No, this is the actual truth to how the market operates, right? There is no ifs, ands, or buts. And if you can now start to rid yourself of the news, the media, and all of these other factors that you now kind of cloud your judgment with, and then start to really understand or look at the market for what it truly is just a bunch of open and closing across international markets, right? And reaching support and resistance at specific times, then all of a sudden you can view this as objectively as you want to, right? And so I strongly recommend that you only trade during these key times, right? And you're going to find that you're going to be right more often than not. And when you're wrong, you're going to be wrong less, because you'll have to spend time waiting for the next key turn. You understand that if the bull does not come in at 12:30, then it will not come in until 2:30 next, right? And anything in between is just meant to kind of distract you and provide that noise. Don't try to guess on a Monday, right? More often than not, Monday is going to be bullish because the shorts that are shorting on Friday get crushed, and then that momentum carries through on a Monday before reversing, midway through Monday, and then of course reversing again towards the end of the day, Monday, and then having the continuation on Tuesday. It's crazy, guys. The market really just operates in cycles, and the more you start to just kind of just look at it, the more you just start to pick up on what's going to happen next, and what's going to happen next, and what's going to happen next. Next is always know what's above you and below you. And there's no excuse for this one, because using 2, 4, 5, 6, and 9, 4, you can just pick out reference points and generate an unlimited amount of levels that are all sure to come into play at some point or another, right? During a trading day or during your swing trade or whatever kind of trade that you're in. Right, so there's never a reason to never know what's below you or what's above you, even at an all-time high, right? At an all-time high, you can simply just plot 2, 4, 5, 6, 9, 4, right? You can go back and you can find the previous key bottom, and then just add the numbers from there, 2, 4, 5, 6, 9, 4, and they're going to generate future numbers that are going to come up time and time again. So let's go. We did this a little bit in the beginning, and I wanted to bring up some like miscellaneous things, some like things that happened this week, right? And this is something that I want you guys to also understand is that if there's going to be a stock market crash, it's not going to happen while you guys are up, right? And this is something I want to, we're going to get into in theory, especially like in the next class, but it's never going to work out that way, right? And I touched on it earlier today. For example, one MES at Interactive Brokers is $1,300. During the night of the sell, right, of the overnight sell for China, I think the margin went up to as high as $1,700, right? So let's say I was in a long position and I had 5 MES at 1330. If I didn't have the money to cover the increase in margin up at 1700, I am now at risk of liquidation, right? And this is exactly how these supports blow up overnight. And you guys are going to see it, and I think we're going to see it this week, and I think you guys are going to be in for a fun treat. And just being able to visually see support blowing up for no other reason than the fact that it's happening at a time that's disadvantageous to the U.S. trader, because while futures market is going to be open for the cash traders in Europe, and their margins are going to be lower, which means if it's a short day, shorts can really, really pile on. And if it's and if U.S. traders who are bullish, who we previously said it was going to be a bullish day, they have their positions, but they cannot adjust their positions overnight, right? In between options, or if it's futures, they're probably sleeping or not paying attention, or they don't have enough money to cover the increase in margin rates that Interactive Broker offers or changes it up to. So now as the shorts pile on, that 3777 support just completely blows up, right? Let's get to the next one. This talks about the levels that we just had, right? This one talks about the simple fact that all of these levels you can generate, right? I can go back to 3694 and add 9494 9494 and give you a level that is sure to come up and be a reaction at SPX 5000, right? Or 6000 or 7000 or 8000, right? And it comes from the simple fact that you can use all these levels, previous reference points, to generate future levels, right? And you can write these down on a piece of paper or a journal right next to you, and you can step into every single trading day understanding what's above you and what's below you, right? And one thing I want to touch on is MM law. It's market maker law, right? What this is essentially is how the market maker decides to fade you. And the market maker will always fade you by a margin of 10. All right, so I always stick to 10, but he will always fade you by a margin of 10. And it always happens at points that are obvious, right? So let's say, for example, that we did have a next sell-off, right? And we sold off from 3924, right? And we were now dropping and blowing up all these key supports. Retail, like I mentioned, is probably going to buy 3724. If there was a level that the MM would fade, the market maker would fade retail at that level, it would be 3714, right? And that's where the market would bottom, because retail would buy that, they would see a loss of 10 points, and they would close their position. The moment that position is closed, even though they were right, the point of this game is not to be right? It's to see the points collected, and they know this. So you seeing negative 10 points, you're thinking, okay, well, I must be wrong. You close the position, they buy your position, and they rip it back up higher. So just keep that in mind as well. And I'll go back over a lot of these stages, and we'll talk about it in detail in the chat as well. But like I mentioned, the point of this is to make sure that the next time you step into, you're ready to step in and make a futures trade. One, you know how to make a futures trade. You know how much it costs. Two, you understand why the markets are moving, when the markets are moving, and lastly, how you can apply these things into real life settings, right? And if I can give this to you after one of these classes, then you will absolutely do well, right? You will do well whether you choose to be a scalp trader, whether you choose to be a swing trader, right? And if you incorporate all of these tools, even as basic as they are, 2, 4, 5, 6, 9, 4, all of the key times, just pay attention to the opens and the closes. and you never trade in the middle, right? If you have all the levels that are coming up or have happened, if you know all the time that the markets are going to move, and you can put together a context to be able to understand that whether a move is justified or incorrect, then you can literally never receive anal with proper risk management, right? It's not possible at that point. And that's where I want you guys to get at. Instead of having these weeks where you're dumping, you know, hundreds and thousands of dollars into losses for simply being wrong on timing, is now all of a sudden you now, you know, are able to, instead of feeling the FOMO, and FOMO comes from the simple fact that you don't know what's going on, right? You would have FOMO'd the 9:30 open on Friday after seeing EX up so much, because you just think, okay, well, I missed the bottom, it's going higher. I don't know where it's going, but it must go higher. This is just asking to get hurt every single time you step into the trading day, right? And this is what happens, and it becomes a chain reaction. Everyone follows each other's thoughts and feelings. Next thing you know, comes 10:30, the chat is silent. Meanwhile, if you look in the matrix chat, the entire time, all we've done was just simply analyze the context, take a look at the time, and just realize the price action, right? The context told us that Europe is not supporting this move, right? And we understand that Europe is a very honest market, right? It's rare that you're going to have Europe give you a fake out. If Europe gaps up because they're bullish, they're going to continue. They're going to gap up because they're bullish, right? The U.S. is not the same way. You guys are going to find, obviously, it's true everywhere, right? There's fake news everywhere, right? And if you are in a country that's full of fake news, why would you ever trust the news, right? And like indicators, news is an after the fact piece of information, right? You think that Bloomberg tweet that came out about, you know, Tesla or the market or Congress is news, but it's not news. It's information that was already handed out, right? It's information that the hedge funds, market makers have already acted on, right? Or factored in. And more often than not, they don't care about it because it's already factored into the price action today. And it's going to be used as a weapon to fade you more often than not. Here, perfect example. Jumbo literally called the top of the week, right? And Bravo picks out just certain points, right? He's like, hey, the chat is getting bullish, right? And we're at 3870. And I'm like, wait, it's 140. At the same time, Jumbo's also pointing out that we have a rejection at 3,900, right? And then our RUT, we also noticed that the RUT 2252 wall was also holding us up. Obviously, you guys understand that, you know, a day or two later, the market drops 150 points to 3724, right? And these are ways that you guys can now understand that you can swing trade from the top, right? You guys literally called at the top. And we also worked our way and caught the bottom as well. So, and we didn't do much besides have simple conversations, right? Between, hey, where did we close here? Where did we open there? Okay, what is Europe doing? What time is it? Right? And from there, you can really get a good grasp of where we are going. And so to everyone that is, you know, super into the matrix and wants to get into it, of course, you know, we can have these detailed conversations about, you know, more complex theories. But I understand that, you know, for a lot of you guys, futures is new. So it wouldn't be right for me to get into here and tell you about, you know, how to fade a fade of a fade of a fade of a fade, right? And that doesn't make any sense. It wouldn't do anything for you besides confuse you more about a product that you are just now stepping into. So for anyone that is new, you know, as we get to question asking time, just remember those key things. And I think this is going to be recorded and handed back out, because everything that I gave you into these tools are tools that you're not going to find, one, anywhere else. Two, you're going to actually be able to act on them, right? These are not tools that you have to, of course, then run over anyone else, or to be able to kind of like let's say, you don't need to purchase another product, you don't need to do anything. Just simply taking all of the information that was handed to you from these numbers, 2, 4, 5, 6, 9, 4, right? To just simple concepts and theories, right? Understanding about momentum, understanding about the visual between 2, 4, 5, 6, 9, 4, understanding which times we are looking to trade and why we're looking to trade them, right? Understanding why the markets move. These are things that are going to allow you guys every single day you step into the market to be able to walk in with, one, an objective point of view, and two, understand when to step into the market and when not to be in the market. And when you're not in the market, those are times when you can, one, go out and, have a normal life, or two, just watch the price action, right? And you can see who's wrong, right? And you can see what the market is doing. And these are things that I do, right? Sometimes I'll have like a Netflix show up and I'll just simply look at the price action and I can simply see that before 2:30 comes, we took a 30-point dip before reversing and then smacking all those shorts with another 50-point rip, right? That's just an example of a scenario that I have drawn up. So these are all concepts and tools that you can use immediately, right away, right? The moment that you start to trade, the moment you step in, to a paper trade, the moment you step into a real live trade, you know what time. You can generate your own level, even if you couldn't generate your own level, right? You understand that 2, 4, 5, 6, and 9, 4 are always going to come up as key. And so you know where to trade. And so really, after all of this, it really comes on to you in terms of the kind of trader you want to be and the kind of trader or the kind of person you are, right? Because like I mentioned, one MES, I can sleep soundly with a 30-point, 50-point stop loss, right? If I think that, if I want to swing trade and I think I got the bottom, I can put a 50-point stop loss, risk $250 and walk away for a week, right? If I come back and I see my stop was hit, it'll notify me, right? TradeAway will send me a notification, hey, your stop was hit. You lost $250, right? But if I'm using all of these theories and all of these tools, then I more than likely have caught the bottom, right? And the idea of a 50-point loss, even with one MES, $250, is still unlikely, right? Because I've used all the tools and I've used all the things that I've learned in terms of matrix principles, and me putting that trade on is more than likely that actually I come back and I'm more up 30, 40 points than I am down 50 points if I've used price action, time, and context correctly. And I kept it simple enough so that way you guys understand that within this you can look at 2, 4, 5, 6, 9, 4. You can look at it between one index, two indices, 3 indices. You can look at it between, globally, between Europe and the US. Time, you have every single key time and you know why it's a key time. Context, if you can go back and look at price action throughout all different indices or even just 2 or 3, you can draw out some context. And so that right there is the basics when it comes to futures trading. And I know a lot of you guys, this is new. So and I know we're getting near the end here, but I do want to stick around. I have much time to kind of stick around and answer questions, or certain things that you guys wanted me to discuss or go over again. I talked about a lot, and it's a new concept for a lot of you people. So for me, really making sure that you understand it is really important to me, because I think that if you understand those 3 basics that I gave you, you've already turned into a different trader, and you will see the results immediately come Monday. So that said, Jumbo, I don't know if you're still recording, if you want to record the question asking part, but I will be here and I am ready to take on questions for anybody.
I think this is probably a good spot to end the recording.
Perfect. Yep. Perfect. Could you please show examples of a long and short?
This conference is no longer being recorded.
Perfect. All right, that was just a recording thing, right, Jumbo? Everyone's still here?
Yeah, everyone's still here.
All right, perfect. All right, so Tech Savvy says, could you please show us examples of a long and a short? Okay, do you mean by way of execution or why I would take a long or a short? I'll wait for your answer.
So the question from my side is, the question from my side is, I think a couple of days back you were mentioning that long at this position, and then you are adding multiple trade alerts, right? So I want to understand that, and then how do you do the execution? So.
Okay, all right, perfect. So I have a good understanding of what you're asking now. Let's head here. So as to when it comes to like when I'm going to put on a trade, like I'm very consistent in the fact that I'm only going to trade during these key times, right? You guys will find that there are certain times in the market, there are certain times in the chat where I don't say a word, right? And that's simply because I'm just doing other things, because I understand that between here and there's nothing that's significant that's going to matter to me. There's nothing significant between here. Nothing significant between here, nothing significant between here and here and here and here. It's all the same, it's all true, right? Every single one of these lines, or every single one of these times is going to mark a point where I'm interested in either getting into a short or I'm interested in getting into a long position, right? And all at that point, understanding these times, and they're all marked out right here for me, all I have to do is just use my better sense of judgment, right? And so from here, even before this candle plays out, it can go lower, right? But if all I have to do is understand, if this is the European close, then I have to understand what Europe is doing at this point. And so it's simple for me to now just use that kind of understanding, pull up FTSE and understand at this same time, at their close, it seems like they bounced, it seems like they opened, rallied, came back down to close, right? They just gave back their gains of their rally, which makes sense, right? The traders who took a profit here, a position here, they go long here, they give back some gains. The moment that happens, what happens? It heads right back to the level where profit taking, of course, naturally occurred, right? But when you can see this, right, in a vacuum and not trying to, add all the noise to the market that the market offers you, because what's happening here, right? What's happening here is all of this U.S. activity. Right, and during this U.S. activity, all that's happening is headlines and fear, and headlines and fear. So when you ask, like, how do I put on a trade? I definitely start with time first, right? If at any point in time I have the urge, like, okay, let me go ahead and put on a trade, I need to look at the clock, right? I need to look at the clock and understand where am I in terms of time, and then from there I'm able to now just come and just give some perspective as to whether or not I want to go long or short, right? And then from there, I have the levels, right? I know that 3724 is the level that I want to buy, right? I have the theory. I understand that if this is truly a fake out, then we probably don't take out this low, right? Because the first test is always the best test. So if that's true, then the second test cannot be tested, because what happens in the second test? Who's going to want to buy that second test? The same people that are getting all of this ANO here, right? They're going to want to buy right here. And if this price comes down here, then I know that I can't buy here, right? And of course I could, right? It could end up being a double bottom, but everybody sees that as a double bottom. And that's too obvious of a trade for me and the kind of trading style that I make to do. Right, and even if I was interested in going long around this area, I wouldn't until I saw a -10 factor, because this is where I think if this had played out on Friday, I think if this is how it would have played out on ES, I'm pretty sure we would have done this. We would have done this drop, and if we came down here, we would have bottomed right here. This is where the market maker would have put in his trade before the market reverses, and it's simply by just simply taking 3724 and taking a measurement of -10 margin. So now, mind you, this didn't actually stop in at 3724. Oh, this here didn't stop in at 3724. I think it stopped in at 3730 actually. SPS 3732 actually, or the low was 3728. Whatever. All that I need to know is that if 3724 is the bottom, if I add 10, then I know that retail is going to get faded on their support buying by a margin of 10. So that leaves us, the first dip buy will come in at 3.4. And so it coming in at 3.2 just happens to have been, good luck or good measure at that point. So as to long or short, use the context, you trade during the times, and you're going to find that you're right more often than not, because the market does not move for any other reason besides an open and close of another market. Knowing this, there is zero reason, there is zero logic in applying a trade outside of those times. And those are the times where you get chopped up. Those are the times where you bought that Apple call and it sits there for 2 hours only because it's not ready to move, because it will not move unless the market also moves, right? If ES drops 50 points, it would take an anomaly, to kind of hold up. And I think that's what we saw on Facebook last week. I was very much bullish on Facebook, but you saw how Facebook kind of weathered the storm all the way throughout. So to see Facebook have a strong week next week, if we are bullish next week, is not going to be a surprise to anybody, especially not me. But that's how I answer in terms of how do I long or short? It's really hard to say kind of now, because I need to take in all of the information. But let's say I can use this replay tool and go into the tool. I can go back to let's go back and see how that would have played out. Let's go to 12, or let's go to 11, but let's go to maybe about 5 minutes before that European close. Let's see how that works. Right here, right? What's happening? Boom, we're selling. At this point, the only thing that's in my mind is understanding the theories that we have. If the first test is always the best test, then this cannot be tested, right? Because then the best test will then be 10 points minus lower. And that's where I would think of going long. So if I'm bullish, right, and the only reason why I'm bullish is because I understand that these guys are just relief rallying, right? And how do I know that this is just a relief rally, not going to turn out to be a crash? Well, let's see. I'm just paying attention to just Europe right now, right? So I'm not even looking at the U.S. market. I can just look at Europe. Well, these guys are closing, so whatever they close is important, right? And that's all I have to do. Simply look at this. What time is it? It's 11:26. We have about 4 minutes until Europe close. And I see that, it's just 3 minutes in. And mind you, this is also important. If levels go level to level at a specific time, if a level is not reached by a specific time, it is then considered a failure, right? So think of that track example that I gave you here, right? So this is for bears, right? The bears are trying to get to a specific level by a specific time. If it doesn't, then this connection can never happen, right? And that's how I choose to look at the market as well. And so when I see this, I see, okay, bears have 3 minutes. They have 3 minutes to close below a key level, right? And let's see if they do. We got 3 minutes. Time is moving on fast here. We got 2 minutes left. And I know that 11, mind you, now at this point, you already understand that 11:30 is a key time. And it marks either a huge continuation or a reversal that's soon to be. We've got 1 minute until until futures close, cash close for Europe. Now, this is where you also can understand whether or not this is bearish or not. Right here, right? You can see right here how this European market closes here. Let me go back. We have almost 45 seconds left. 45 seconds. At this point, you still haven't even placed a trade yet on ES. You're just looking to see, how does Europe close? 10 seconds. Boom. That's the close. Right there. Right? And you already have this level marked down as a key level. And even if it didn't happen, even if, mind you, I think we mentioned that we wanted to close below the 6,600 mark. And that's a daily close too. So let's take a look at the daily chart right there. Look at that. Right? Just zoom out the time frame. And it just makes sense. Right? You had the bears try to sell and they needed a close that was below this. Right? What was that? The 65 mark. Where did we close? Or not the 50, the 56 mark, or 65, 65.49. Right? They didn't even get that close. They didn't get the close that they wanted. Right? And we had a pretty bullish close on Europe. Immediately at 11:30, you have the U.S. market. You as a U.S. trader, you've already identified that the FTSE has not. You've already identified that FTSE is not bearish, right? And in fact, it can be seen as bullish. All you must do at this point is wait, right? And we've done our waiting. We understand that 11:30 is a key turn for us. So let's just hit play. 11:30, 15 seconds into 11:30. I'm going to tell you when most of you will probably have gone long, right? So the DGen, right? The DGen who, this is probably Bravo, right? Who probably clicks trade like immediately 11:30, not even like 20 seconds into it. He probably already hit it just with the market maker, right? But a lot of you guys are probably looking to see, all right, when is it? 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 You're scared here. You're scared here. You're scared here. You're probably still scared here. And now, right there. This is when you guys would have gone long. Let's say you went long and you put a stop at the level that the previous bears could not close. And you just left your stop there. You've done your analysis, right? You've gone 2 hours into the market. You haven't made a trade. You're going to look. You've done your analysis in the market. You understand that it's probably bullish. You have your support. You have your context. You made the trade at the right time. And you set your stop here and you walked away. Obviously, you understand that, almost 2 hours later, you're right here. If you're wrong, you would have stopped out right there. You would have taken, maybe a $30, $40 loss, and you would have simply just moved on to the next level of support before trying the same tactic again, right? And look, at this point, you're probably, shaking. And this is why I say to walk away sometimes, especially if you're looking to swing trade. Because if you got this trade here and you're a scalper, you probably closed here, right, for a quick scalp. But if you're thinking swing because you want to get back to another range, walk away, because let me tell you, you're probably going to get scared watching this happen here, right? It's better for you to define your risk before entering a trade, because then you don't care about this because you're already expecting. I've already factored into kind of like my mental framework that this can happen. So this dancing here means nothing to you. So that's how I would personally answer that question. 2, 4, 5, 6, 9, 4 are basically levels on the indices. We're marking levels as support and resistance, right? Correct. Yes, that is the most generic and basic way to do it, and it will still work, right? It will still work, because you guys can choose to get as detailed or how involved in this whole theory as you want. But let's just go ahead and just test that out, right? Let me just put 3894 here. Let's say you decided you want to put 3894 and say, okay, well, this is a mark. I'm going to play long above it, and I'm going to play short above it. The moment that we hit 3894, you would just hit long and you would stop. Well, you would put like, a 10-point stop or whatever, right? And you would just keep playing it. And you would eventually get to a point where you would get higher. And where would you go to? It's almost there. It's almost funny the way it's written out, right? You would go from 9.4. You might have taken a profit. You should have taken a profit. This is where you should take a profit, right? From 9.4 to 2.4, right? Even if you decided, okay, well, I might take 2.4 and use that as a long as well, use that as a base. All right, look at where these candles end, guys. This is not a coincidence. They're daily candles that are ending right there, right? how accurate of a 2-4 do you need for, this level right here to be 3923.25, right? You can play the long, take the long, 5-6. Literally the tail end. You would have caught the top of the market, right? And as long as you're setting these 10-point stops, who cares if the top is actually 3960 if you got 5-6, right? And if you set a 10-point stop, it catches, you take you're looking at $40, it never gets your $100, and you come back down. At that point, you've literally sold the top. Let's say you were a swing trader. You sold the top, right? You sold the top, and you would have caught that move, and you would have closed at some point here, I would assume. But you caught the top. Let's say you even just missed the top, and you're like, okay, well, I need to find a new swing trade. You're now looking at this, you're looking at this, you're looking at this, and you're keeping it to mind all of Europe, right? And all you would have done is just simply just say, okay, well, am I going to go long 3756? Nope, it broke. You stopped out. Let's say you set a stop of 10 points. You took a loss of 3756, 3746 of 10 points. You lost $50, and the market keeps going, and it heads down to 3724. You try again. You set a 10-point stop. Now it heads back up, and it gives you $100, right? And those are how you can use 3, 7. Those are examples of how you can use 2, 4, 5, 6, and 9, 4. Without even having to get as accurate as possible. But of course, you'll realize that it's not always as easy as 2, 4, 5, 6, and 9, 4. Sometimes the number is 2, 2, 5, 2, right? And if you go back to the matrix numbers, you'll find that a lot of times this is why you need to train your eye, right? Because I see 2, 4, 5, 6, and 9, 4 in all of these numbers, right? I just use 2, 4, 5, 6, and 9, 4 as a way to mentally visualize resistance and support. And that's why I'm telling a lot of you guys, just, hey, look, just stick to looking for 2, 4, 5, 6, and 9, 4. And you're always going to have like a framework that understands support and resistance. And more often than not, you're going to be right. Because, let me plot out 3, 8, 2, 4. Look at this point. All right, look at this. This is literally the halfway mark to all of the price action that you saw last week. 3824 right here. Right? Where do you want to go next? 3794? Look at that. Where do you want to go next? 3756? Right? Right there. Now the reason why this fell is simply because we had 377, right? And how did we get 3777? We got 3777 because we took one of the key reference points. I think it was like 3694. I don't know which number it was exactly. We added 94, and we wrote down that 3787 was actually one of the numbers that was key to us. Factoring in law, 3787 minus 10 is 3777. So the real support generated by the market is really 3787. You see that that's the top end of my support. But like I mentioned, the more you learn to fade yourself, even by a margin of 10, you will see that you're right more often, because the market's going to do all it can to get you to be wrong, right? And so 3787 is a level that was generated by taking a previous reference point, using that and adding 2, 4, 5, 6, 9, 4. And you can get very creative as to how you do these additions, right? And that's what I'm saying. You can create an endless list of numbers, organize them, right, into an Excel sheet format, and stare at those levels in comparison to what the market is doing every single day. And you would know that a 94-point rip from said point is going to take you to this next level, right? And it's never a coincidence. The market doesn't exactly sell 56 points from level to level on accident. It's never, never, never an accident. Any other questions? Could you talk about your stop loss strategy? Yeah, I think I just touched on that as well. Do you always use certain amount of points for stop loss, or do you just? Yeah, so good point on that last part. it does depend on the situation. The reason why I say that is if I want to swing, right? Let's say I want to catch 3724, and I was like, you know what? At some point, this selling has got to stop, right? And I don't care if the market takes another 50 points from me, right? $250, and I've accepted that risk mentally. Even if I buy 3756 and walk away, I might cry for 23 points or 30 points. I'm like, damn, I just lost $150. But I've already mentally told myself that I'm prepared to lose 250. So 150 is like, damn, I'm through the halfway mark. And because I'm able to kind of mentally and emotionally control those thoughts and feelings, I don't react and close my position down $150. And I'm rewarded for it almost hours later when I'm up $100. So yes, it truly does depend on who you are as a trader, your next risk profile, right? In terms of how much you can handle of MAE. And MAE is just referred to like points that you've lost, right? Or points that you've had to suffer in order to get your gain, right? And so even if you're, for example, hold on, give me 1 second. I think I got stuck here. Okay, perfect. So if, for example, right, going back to that same example, almost an hour later, I would have been rewarded for my patience and by being able to calculate exactly how much I wanted to lose, right? And that's kind of like the key. That's the kind of key part about that level right there. So just bringing that up. Again, let's see, is there any other questions? Can Javon please say his name? Yeah, I wouldn't mind actually hearing it if I'm saying it wrong. No, I don't think I'm gonna get that. I'll get lucky later on. Are there any other questions, guys? I mean, as I mentioned, I'm glad to. Is on any tool, is it possible to show ES and key examples? Yeah, of course, definitely. So, examples. Let's pull up MNQ, right? Let's switch out of ES. I'm getting tired of this index. Let's pull up MNQ, right? And I think I mentioned that this was going to be the easiest one. Why? Because I think we already established when coming into the week that SPX and CAC were going to be the absolute key levels that we needed to, or the absolute key markets that we need to focus on, right? And so what I mean by that is when I look at NQ and it was selling much harder, I think you all noticed that, right? You all noticed the tech names selling way harder than any other name that you had, right? When it came to just the market price action, Tesla was selling all week, Apple was selling all week, Facebook did pretty well. And of course, that comes from the simple fact that the NQ was also just, had a terrible week, right, in comparison to the ES. So if there was ever going to be a support level that was going to come in or a reversal that was going to come in, the one that suffered the most is going to recover probably the fastest, right? And so that was the easiest trade on last week. And so let's just flip this to 30 minutes and let's just see how that played out just using time as well. So let's go back and let's just take a look at, let's see, when did the markets turn to 11:30? So let's just take a look at this here and let's go back to 11:25. All right, perfect. So here we go. I think at this point I've already mentioned that MNQ is probably going to be an easier trade. We have 5 minutes until the next key time, right? At this point you already know what the time is, right? You're counting down, you're looking. You have your numbers, right? Down here in the 200s, you understand that you have 3 options. You can go along 224, 256 and 294, right? And it's really just a preference. And at this point, you just have to simply wait your time, right? You can go long here under 2.4. It doesn't really give you much confirmation, and NQ moves very fast, right? So it's the likelihood of you really catching, 2.4, 5.6 or 9.4 is very, 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 very low. So this is exactly how I would have traded it. I'm watching MNQ. I'm watching MNQ. Let's go ahead and add ES. Let's go ahead and add ES. I'm watching ES. Mind you, we're looking this week, and we understand that ES will be the key level or the key market that we're looking to give us guidance this week. So to see it not also come down and touch and make a double bottom or come back and attack these buyers definitely gave a sign of strength to all of this, right? But we can't just look at that in a vacuum. All we can do is just look back and look at FTSE, right? And if we pull up their 30-minute chart, they didn't close below their key level. I can't pull up CAC on here, but they didn't close below their key level as well. And we refer to that all day long. And now we go back and we look at MNQ. Let's go ahead and just continue to hit play. If I see ES doing this, then I'm probably going to close my eyes and purchase MNQ because this is the leader, right? And if this one is leading, then it's only a matter of time before a lot of this move, which, I mean, almost 400 points, was easy, right? Because you could just go long here, and MNQ moves at $2 per point. So even down here at 2224 or 224, you understand that the level below you is 194. And where did we bottom here? The bottom at, we couldn't even get below the 200 mark, right? And so you might have gone long here and just waited it out. And of course, eventually you would have banked 400 points, or at least 300 if you were in DGen, you know. But that's other things. How to execute. All right. It's a little different. And I think I would work with you probably one-on-one. I would like to know what platform you use. What I mean by that is it's very simple on Tradeovate, where you can really come here and say, okay, I'd like to long here if we happen to, this is a demo trade, I could long here if I'd like to. Actually, wait, can I demo trade in here while replaying? Let's see. Let's say I'm late and I want to catch right here. Let me just buy the market. I'm late, by the way. I think I'm about 7 minutes late into this. And I'm pretty much suffering right now. I wouldn't have bought this late, but I didn't want to rewind. So mind you, my average is 12,301. And I'm down a bit. But all I have to do is simply realize the fact that this is a key time. And if this momentum is going to be true, then it must follow along. And all I have to do is refer to this guy and this guy to understand that this is probably true momentum, right? And now I've seen this. What I do next, I will probably wait for the next key turn. So I will wait for this candle to close before I set a stop here. So I'm still kind of very much patient, watching to see what happens. And of course, this is all hindsight, but you can see through the chat that we were already talking about buying well before this candle even happened. So we would have already really been up all these points and just placed the stop right there. So let's see. It's probably paying attention as well. Mind you, at this point, we're late, right? We still haven't gotten through this point. And it's funny because like the market got me, right? It's like right there. But knowing what's going to happen, right? I might just degen trade. Why not? You should never do this, but why not? You know what's going to happen. This is how trading looks like, by the way, when you know what's going to happen, right? You just, okay, well, if you're going to give me 3 points, and there we go. This was Yvonne's account on Friday. There we go. Right, and that's when it comes to execution. Right now, you're in the trade. You're really happy. You see this, guys. At this point, you should bank on this, right? It's crazy to take 4 M&Q, number one, because you see how fast it moves and how fast. Like, think about this. We got in here, right, and it's only here, and that's how much you've made, right? Almost $400. So imagine it reversing. So try to think about it both ways when it comes to risk, because when I see this, my stop is going here. Right? My stop is going here. And that's why I love Trade Evade, because I can visually like kind of just put where my stops are. And if the market comes and takes me, that's fine. But you want to get into a position where you're putting stops in places where you don't need to kind of react late. Right? And so if the market comes back, it doesn't even come back to my stop, right? It doesn't even come back to it. But as long as you're diligent about placing these orders, or at least, kind of being diligent about all of this, you're going to find that you're always going to be good, because you're never going to take a loss if it comes back and smacks you through, right? And at this point, if I look up, it's only been 20 minutes into the clock, so I will leave this alone and we'll take a look to see if there's another extra question. So we've executed, and yes, bravo, we will not miss you. I don't know if he's still here, but we will not miss you. We've executed the trade. Hopefully this is a good example. So far, no, I didn't know that you could actually trade. Oh, look, I think the trade went against me, right? But look exactly how much money I've lost, guys. I've lost $0 and I've made $5, right? But that's the risk in terms of kind of seeing yourself up $400 and not taking the money. That's one thing. But to do that and also not put a stop at break even is asking to get hurt in this market. So definitely control the FOMO, definitely control the greed. And you're going to find that more often than not, when the market does do things like that, that it's not going to hurt you, and instead just be like, oh man, I should have taken the profit, instead of saying, man, I lost, $400 on the day. The point is to save as much money as possible, and these tools will do so. What is the stop loss when you place the execution on this trade? I think it was, no, it was break even on this one. So at first it was 12,207, right? Because or below 12,207, because that was a level that these bears could not reach. And if they could not reach it, at some point we would reverse. And that was the theory behind that trade there, right? And of course I started out down here, so I wouldn't have been stopped. But in this particular trade, I think my entry was about like right here, or like right here halfway through. And I placed the stop, instead at break even after it gave me the money, right? Because think about it in theory, just like how we think about the levels and, kind of game theory, the first test is the best test, right? So to see it rip through your position and go up is a sign of confirmation. And at that moment, you want to place your stop back at break even. Because what you don't want is to bet against support coming in on the second time that it comes back to you. Because we talked about the second attempt is more than likely going to fail, because second attempt is coming from the retail buyer who hopes to get the same reaction, as the first buyer. And the first buyer is confident because he knows what he's doing, right? And so it's definitely a game of, it's definitely a factor of a mix of game theory involved as well. Do you watch only 30-minute candles for trade entry? Yes. So I only watch 30-minute candles in the simple fact that that's how the times operate for me, right? In terms of 11:30, it's easier for me as a visual person to see this, because I see V, or I see a potential W. So whereas I see the first leg of the V or W coming at the U.S. Open, and the second leg come in exactly, mind you, guys, come on, your trading is going to multiply just using these times. Exactly at 9:30 sell, exactly at 11:30 buy, right? If there's supposed to be a typical Friday, and not a Friday where you had so many bears wrong, 12:30 might have offered a W pattern, right? And I would have watched out for that. You saw in the chat where I mentioned that, hey, look, if you're long, probably look to take some gains off, because while the V is possible, and you saw that last week, I think that was more of a result as the fact that, you know, you had all these folks wrong, and now all these guys are going to be right. But that's not you. You don't normally see this on Friday. So when you do, you normally will get this. But when you see the normal typical action and it's not as aggressive of a sell, you're going to see that halfway through, or that 12:30 mark, or that 11:30 mark will also then coincide with the third leg of the pattern, which will give you that W. And as you know, you never short into close on a Friday, and that'll give you the final leg of that mark. As for the time frame, I don't exactly always watch or use charts. A lot of times when I'm using Fridays, or I need to like at least draw out a visual pattern for myself, this is when I got scared, guys, of the W. I thought it would W here, and then 12:30 would take us, or 12:30 would W, and then 2:30 would take us. But back to it. I use the 30-minute chart only just so I can see the time, be able to draw out the visuals. But very much, I have no problem using the daily. Right, the daily is important for me because how was I able to understand the context or the importance of last week? 3756. I mean, when I just step out or step away for a moment, when I just take a zoom out and just look at this, 3756, right? 3756 takes us back to prices of December 29th, or 3728. I mean, right? This is where we were in December of 2000. This isn't cash, so you see the whole futures thing. But if it was cash, you would see that this would be a gap, and it would offer a gap. But because it's futures, it's always going to be connected. But cash, you would have seen a. Actually, can I pull it up here? Yeah, it's better visual here. Perfect. Let's take the daily. So 3756. Let's just put that right there, right? And that right there, boom. So this was the context and the importance of what we saw last week, right? Is that you had bears try to essentially eliminate an entire move that was called that happened in 2021, the entire new year. You try to eliminate that entire move. The bullish case came from the fact where bears could not close it into 2020 levels, right? And that's the punch that you get there. This selling that happened on Friday, I mean, like I mentioned, predicting is always going to get you hurt, which is why you need to be prepared for anything. But when you use context, you can understand that this move, if it doesn't close into below these prices, they don't get this move that they want, right? And instead, you're going to get an equal and opposite reaction. So to go from 3,900 to, 3,734, bears have a lot to defend next week because, you might get punched in the mouth really, really hard. Of course, you're going to have to get past certain levels. The high is 3,906, or at least last week, 3,906 or 3,9, whatever, on SPX. I'm pretty sure 2.4 will come up next. 3,924 will be the next stop. And I think that's at that point where we will see a level where we're either going to head back down to give more bears a shot, or at this point we are headed for a interesting close, or at least an interesting finish between the next 75 points. I mentioned that I told you guys I want to fade 4,000. I think just retail number, I think just the emotions that 4,000 will exude is a trade that I'm looking to make. And if this move happens before, even at 2.5, if this move happens early and the speed of it is aggressive, I'm looking for a retrace, right? And I talked to you about this 2.4 level earlier, right? This 3.724, retail has seen this level be defended, and it didn't get attacked the second time for a specific reason. Because if we come from up here and we head down here, and this will most likely happen overnight, this will snap. This momentum will snap this, Momentum will snap this, momentum will snap this, momentum will snap this before we look to bottom there. And this here takes you all the way back to the Moderna vaccine. Right? This is the vaccine pump. This is where you had ES gap up, all these gaps unfilled, and shorts were looking to essentially smack this down. Right? And this is what I refer to when I say that I've seen this price action happen before. Right? I've seen this. I've seen this in terms of the bearish mindset between the retail investors. Boom, get that all the way back up. Boom, what happens next? Right? And what do we have here? Boom, send it back up. Retail buys the dip, smack again. They probably don't buy the dip, and your force of FOMO appear, and that gives you the reason why I think that 4,000 will likely be a fade. Let's head back to the questions part. Do you only watch 3 minutes? Yeah. So yeah, then answer the question. Do I only? No, but I do watch it to keep track of time and keep track of maybe perhaps visuals that I'm looking for, especially on a Friday when I'm looking for a shape to kind of form out. Good question. So I think it has to start with the fact that I mentioned to you that Europe is very much an honest index, right? Since you have IBKR, these are the requirements for IBKR. So take a look at that. You would need, right? This is how much it takes to trade 1 MES on IBKR. You need $2,000 for a margin account. This is how much it takes to have 1 MES during the day, during cash open, and then how much it takes during overnight. So this is why right here, again, guys, why we're never going to get that blow up. Or overnight is here, I'm sorry. Overnight is here, and this is the intraday. This is why right here, there's 2 differences. This is why ES blows up at night versus it blowing up in the standard session, right? Because we're going to increase this margin to 1,800 if you know, volatility increases, right? So someone who has a smaller account and can't factor in the 10 MES that he has at 1,500 to account for the increase in margin at 1,800 will get liquidated, right? And if he's liquidated at a support, that's when you start to see these supports just boom, right, and just crash right through, and it's just how that goes. Questions. Divergence, right? Okay, perfect. Yeah, that was a question. Divergence. I don't know how to put this perfectly, and I think I'll come back to this question in the chat. But divergence. So it's important to note that Europe is very much honest with what they do when it comes to their price action, right? If Europe is going to be bearish, like I mentioned, they're going to be bearish, and they're not going to, you know, like a U.S. market, kind of like try to deceive you about it. Which is why I mentioned, if you guys are looking for an easy start into futures, and you know happen to be at a time, you know, or are ambitious enough to kind of trade those times, you're going to find that FTSE very much follows the law to the T, right? Because where did they bottom this sell? 3524 plus 10, right? So maybe you even missed the 3. You can get 24 ahead of time. Or 34 ahead of time if you take that buy, right? Or 6524, you take that buy, and it tops. Where does it top off at? 6698. You would have sold at 94, right? And so very much these European markets are true to form when it comes to these numbers, and the same thing is true when it comes to sentiment. I think I mentioned to you that if you would have flipped the price action on Wednesday or Thursday and placed a bullish US with a bearish Europe, I would have told you that overnight we would have blown up and it would have kept instead of reversing like you saw this week. And so that's how I play divergence and convergence. The simple fact that I always give Europe the benefit of the doubt, right? Let's see what happens if you short. If you go short, end of day, let me show you what happens and how bad that's going to get for you. Oh, this was FTSE, so close, crap. Looking for ES. And so knowing that, I always give benefit of doubt to the European traders, right? And I won't sit there and try to say that whatever move that they're making is lying. So at 12:30, when it comes time to watch the U.S. convergence and divergence, it's important to kind of look and see what the European close was, and see whether or not they closed above a bullish point or a bearish point. Because then, if you see the U.S. is doing the complete opposite, it's divergence, and you can stay the divergence, right? Because you can long that you could long the support, right? You would know the support by using 2, 4, 5, 6 on the way down, kind of like how we played this move, right? There was divergence between Europe and U.S. So we played every single step of the way. It knew 3777 was our support. It fell. It means likely 5, 6 would fall because of the momentum. So it takes us to 2, 4, and that's it, right? And that's how I would have viewed. Just divergence and convergence. So it's important to know what Europe's doing, because then you can understand that whatever the U.S. is doing is also likely going to follow. And the reason why it's important is because the U.S. only gets 2 hours to make a decision without Europe being open as a cash indice, right? I am banking on my short right now. Let me just tell you that right now. Also, another thing, when it comes to volatility, outside of days like this where being dumb will just be dumb, you're always going to win when it comes to volatility, because volatility comes to the simple fact that the market can do this, right? It can rip 100 and drop 100 all in the same. And look where I went short from, guys. 3794. That's literally not even close. And I closed my position, right? 3794 closes it, and I think. Yeah, 3797. With volatility, you can obviously see how, of course, the range can go back and forth, right? You just ripped 100 points, went back 100 points, down 100 points, and went up 100 points, right? When you see this kind of thing, you understand that if you bought here, whether or not you went short or long here, I mean, how many times does the market give you an exit and an opportunity to bank profit, right? So volatility is something that, when it comes to traders, it definitely works for options. For futures, because take a look. You could never have been wrong. The only time you could have been wrong is if you did this. If you short here, you short here. You were wrong, right? And you were wrong a lot. And the only reason why you're wrong is because you didn't use price, time, or context to understand what was happening. So yeah. Meaning, what if SPX had dumped? Exactly. Yeah, that's exactly what I meant. I think I touched on that as well. I might just be reading that a little bit later. If SPX has dumped, would have dumped, I told you, I would have looked at 3694, I would have looked at 3656, and I would have looked at 3624. I would have found one of those reasons to be a buyer. And because I understand that the momentum coming down is very much a heavy momentum, so watching this happen, what time is it? It's 1 o'clock, so it's probably not even a bad time, but another momentum time, brother. What was I talking about? Oh yeah, and watching the momentum coming from the top down, you can see that 3694, 3656, 3624 are all levels that I'm going to go ahead and play, right? If we come down from 3694, I'll put my stop at tight stop, right? Maybe I might give myself 10 points, or maybe 5 points, maybe actually, just depending on how things play out. But the reason why you never really have to guess, and you're not going to take that much of a loss trying to, of course, get that bottom or get that turn in the market, is the turn will likely happen with a key time. So if you're trying to catch the bottom, let's say, for example, if this was 11 o'clock and ES was doing this bounce at 11 o'clock, I would not have bought, right? Even if we would have bounced up 20 points from that low, only in the simple fact that I understand that there's a key moment in time in which the market is going to make a key move, and I cannot make my next trading decision without that piece of information. And that's how simple it gets to be. That's how simple it gets to be at that point, right? Because it's no longer about, I just smashed 10 ads. points. You're about to see profit porn in 2 seconds. It's not. This game really does not come to about guessing anymore. As I'm reading, some of these comments. And so, if SBS would have dumped, I simply would. The short answer is I would have just found the next support. And I had these levels written down ahead of time. And so a lot of the times you guys are thinking that maybe possibly like this person is guessing from the future, or this person is doing anything other than what I've shown you. Sure, there are more complex parts to all of this, but at the core, it does come down to catching these key numbers at the correct time. And that's it. And using those key times and those key numbers across different indices, right? And that's how you're able to develop context. So first thing that comes into play is context. The next thing that comes into play is price action. And the next thing that comes into play is time. So let's think, for example, back to this Friday. The context is what? If Europe closes under a specific level, Europe is bullish. Europe is bearish. If Europe closes above a specific level, it's bullish. Right? So US dumps, I don't need to guess at the fact the US was going to dump. It just made sense to me because FTSE was going to pump and then relief rally at the same time that the US market was going to open. And so here's their relief rally, and US took it to the extremes. Knowing the context, at this point, all I have to do is wait for price action to line up. Price action is the next step. I'm watching price action, and here we go. 3724 plus 10 and M law. If that's true, then the MM does not get touched here. Nobody bought this besides the hedge funds. Let me tell you that right now, except people who are also in the matrix, right? Nobody bought this, right? You're scared. Retail is scared. They're not thinking, let me buy this. They want to see it come back down, and they want to buy this here. So what does the market do? Fade them. Fade them by a measurement of 10 points. And bounce here, and that's exactly how you're going to see this play happen all the time. Create one specific new low, bounce, come back down, fade that low by 10 points or so with a margin of 10 points, bounce, come back, because what's this person thinking? Support. Now what are they going to do? Flush. That right there is a play you will see play out thousands and thousands and thousands of times. It's a repeat pattern. Like I mentioned, you're going to find out that a lot of these plays that happen are just repeat events, and then it's just another one of those things. The right side is the DOM. So this is where the order flow people kind of come into play and kind of look at the volume and things like that. I can tell you that I don't look at this at any point in time, guys. Sure, it's cool, but like it moves too fast, and none of the numbers actually make any sense to me. So I can be very honest there and tell you that I don't look, nor do I care about anything that happens here, because I can see it by looking at the price, right? You can see the volume, right? How can you see volume? Because when you see 3794 or 3894, right, or 3806, and you see it drop in 5 minutes of 15 points like this, right, 15 points. At that point, you're like, okay, well, the volume just picked up, and these are things that you can see. You don't need to go on a chart and look at a candle and say that this is a big volume, because think about it, this is little volume, right? And that's the reason why it's giving you this range here. But you can just look to see exactly kind of like how the volume plays out, or how the momentum, I should say, not volume, how the momentum plays out. But when it comes to this area here, the DOM, I rarely ever look at it. If I could get rid of this, I could, because I think it's slowing down my computer. But that's how I would do it. And then you guys can see my DGen dip buy here, because you're never short the end of the day. My DGen dip buy here is up 30,000, and I'm now richer than everyone in the chat, which is not true. So let's see if there are any other questions. Probably not. Bubbly, any other questions? Or anyone else? Okay. So going forward, I want you guys to understand that, like, I do plan to. I just made $30,000. I do plan to stick in the chat, right? It's not a matter of. It wasn't a matter of like, I'm looking to just open this chat, but I do want to see kind of you guys support, especially those of you who will be active traders. kind of support each other. You've already started doing so by kind of giving each other points of references in terms of resistance on the Russell, resistance on SPX, or the resistance on NDX. Because this is something that you will come to eventually learn how to do alone, but you will find that as you work together, each one of you guys can take one of these key parts and you'll always catch something that the other person is missing, kind of self-correcting each other on a day-to-day basis and keeping each other in check and in line with all the things that you've learned today. And essentially, allow you guys to trade better than maybe you've already experienced so far. But again, as basic as it gets, stick to the key times and stick to the key numbers and just journal on a day-to-day basis, right? Journal the open, journal the close. If you can't be active, if you're active, monitor the price action, right? 2, 4, 5, 6, 9, 4. What are key levels? Are we closing above a key level? When and where do we close at a specific level, right? I can tell you with SPX closing at 3.3841, that meant that whatever move that happened from 3.837, which was the previous buy zone, it was premature, right? Which means that at some point we're either going to get a continuation on Sunday of the bullish momentum, or at some point early Sunday you're going to get a reversion, right? And that's just how it goes. But just sticking to all of our key times, using all of our key numbers, and being able to just simply draw context from looking at the key indices that we're looking at, you guys are going to find that you're making trades at the right time. You're ignoring the bearish sentiment or the bullish sentiment at the right time, and you're trading in a way where you're focused more on collecting points and lowering risk than it is looking for home runs. And that's kind of what I'm looking to draw home here today, especially with the first-time futures traders, because I've seen this get bad. Don't get me wrong. I've seen this get bad. Futures traders who's come in, trading at the wrong time, trading levels that are completely irrelevant or misunderstanding the context. And what that leads to is going long here, shorting here, going long here, shorting here, and who knows what happens here, right? Because Mondays, we never guess, right? But if I had to tell you, I mean, what, do we get a W, right? Do we get a W pattern, or do we get an extended V? If you get an extended V, then the context here becomes, guys, we have a really extended rally, right? And the pressure is on both to keep the rally going. And naturally, myself, I would be looking to fade at some point to the high end of that rally. But that's for later. I think I'll touch on that in the chat later on. But it doesn't seem like we have any additional questions. Oh, yes, no problem. Sorry, one last question. First of all, no worries. Questions are fine. Currently, MAQ is 12659. Long means we see increase. All right. I don't exactly understand why. So currently, MAQ is 12659. Going long would mean you would see an increase in your index. Or short means there would be a fall in the futures index. Okay, yeah, exactly. Okay, I understand what your question is. Yeah. So if you wanted to, you could use 12656, and of course, that is 12659. MQ can rarely ever get the number correct. But you're right. 12659 can be seen as 12656, and you could scalp that level, and you could probably take it to 12659. Oh, 12694, I should say, right? And you can probably expect to meet some resistance there at 12694, and if it doesn't, then it's headed to 24, right? And that's how you can use to gauge your entry and your exit. And of course, what would your stop be in that situation? Your stop would be 12656 if you wanted to be very, very conservative. But I'm telling you, with certain parts of this, keeping a tight stop will also just stop you out immediately. But you'll find that when you trade, again, with these times, you're going to find that your stop doesn't get met because you're trading at a key level. And if you're trading at a key level, you're more than likely going with the flow of momentum, which is going to more than likely give you less MAE, giving you less of a chance that your stop is going to get hit. So yeah, you are correct in that scenario. Like I mentioned, with futures trading, guys, you can get as creative as you want, because let's say someone was still holding their long from here. Sure, there really is no reason to sell up here. You might even set a stop like here and just say, you know, for the hell of it, right? Why not? Because if this goes to 4,000, I mean, you just made almost 300 points, right? Just buying that low. And then if it does go to 4,000, you got 300 points, $1,500 on one MES, right? Or $15,000 on one ES, right? And that's how simple swing trading can be, right? Especially when you understand the time, the context, and the price action, and you know you can use that across all the different indices. You can understand, okay, well, sell. I can buy here, or I can buy here. I could even buy here, right? Where could you also have bought? You could have bought 12, 7, 5, 6, which ironically is right here, right? Look at all these closes. Close here, tail here. All of the price action right here, 12, 7, 5, 6. Look where this tail ends, right? 5, 4. All of this action, right? And I think I mentioned in the chat as well. I think I said that any price action above 3, 7, 5, 6 is I would go long, right? And same thing as you see here, all the price action. If you miss 3, 7, 5, 6, you should not FOMO here. Absolutely not, because you're either going to meet an R or resistance at 3777, which was our previous major support, and you're either going to meet a resistance and this is going to get smacked back down and you'll be right, or if you think you're bullish, which you should be in this situation, you could use this and base it above 3777, and your entry would be 377. It would also be, you know, 377 just in case it happens to reverse, right? And now you can catch the move or the momentum from here and ride it up. If you want to ride it up and get a stop, where would you stop? 3794, which is the next on the list, right? Well, technically 87, but remember 87 is just the MM number minus 10. 94 would be their next stop, right? And look exactly where all this price action again comes back to 94, right? Where does this thing come here, right? 96, right? And so again, you're looking at another key level. You're thinking anything hard about. You're just adding 245694 from 3794. What should be your next stop, right? 3824 maybe, right? And us not making 3824 kind of gives you, you know, a little bit thoughts as to why we may have a pullback, because the market reaches certain levels at specific times. And I didn't do any research yet to see if whether or not 3817 is a key number that comes from a reference point. But if it's not, then I understand that any action that doesn't happen above this is probably going to see some relief. Why? Because this person down here wants to cover as much points as he can. And so does this person, so does this person, so does this person. So if you can't get anything higher, maybe you close here, right? Yeah, so literally, I mean, check it out. Like, pull up any other index. And I'm not saying that you're going to find that you're gonna, you know, run into positions where, you know, you're gonna be able to kind of get all of these times down correctly. But I mean, let's just take a look at Apple, for example, right? Let's just use Apple as this key matrix times. Since it follows the index, right? And the index is going to do what it does. So Apple sells the open, Apple comes here, bottoms here, 11:30, right? You would have gotten Apple calls. Boom. You would have took Apple calls same day, right? You went into YOLO, you could do, you know, same day YOLOs, and you could take from 117, you would rip all the way to 121, right? And just take a look at every single step of each key time. What do you see, right? Dump, chop, right? Let's say you didn't know this was you know, not our key time, right? This is right before our EU cash close. you'd be stuck here in chop. You would have bought options here. You'd have saw some gains. You would have never took this profit. It would have came back. You would have sat there. You'd have waited on it. It would have smacked you some more. You would have sat there through the chop. That's 30 minutes. That's another 30 minutes. Then at that point, they would have, right? It would have scared you first. And then you would have closed out here, right? And then you know why you would have closed out? Remember the previous low? Does anyone remember the previous low last week on Apple? I think it came here, 118.39, right? And so take a look at this. What can I tell you? 118.39. Did you want to get really, really, really? This is like next classes and stuff like that. That's how we can really take all of this and now start to really pull out some weird stuff. So let's take this low, which is 118.39. So 118.39. And let's add 9.4, right? 94. Why can't we do 9.4? That's 127.29, right? So let's go ahead and take, that was the low here. And what is the close here? Look at that close. And if you can't look at that, the close up here is 127.79. To the exact measurement, it moved 9.4 or 94 points from this low to here. Right? Now, think about this. Why wouldn't this low have held? Right? Let's go back and let's take this 118.39. It's the same thing that I talked about, the first touch and the second touch. Right? So 118.39. Now let's just fade it by a measurement of 1.0. 117.39. What's the low here? The low is 117.57, right? And that came from nothing between understanding this is a low. You would have matched this buy with naturally the same time you would have bought ES, and that would have came at a key turn, right? And you would have been able to measure that. You would not have bought 118 the second time because you understand that 118 was already bought, right? And that it would get faded by a measurement of 10. Measurement of 10, bought exactly. And do you think do you think that it is a coincidence, right? And the more you start to look at these times, the more you start to understand that this is very much something that can change your entire trading career. Is this? It's not a coincidence that this here happened 30 minutes before we would reverse into the EU cash close. Right? And that's why I mentioned that any time that you're trading in between these times is a time that somebody's going to get fucked. And the reason why is because this is the most advantageous time to take advantage of the retail trader, because you dump it, close the European session, and punch it up higher. Right? And so those are real world examples of how, we've just used time to trade Apple, and then just simple things like the MM rule, right? And MM law, to trade, or at least you would understand where our supports and our resistance will come in. Same thing with the momentum, right? You got momentum here, gets smacked down, it comes through. Why would you short 120 again? Of course, it's going to smack through and rip up higher. Now we're basing above a level that was previous resistance, and the more that we base above this 120-ish level is the reason that gives you cause to send it up even higher. Right. So those are some practical explanations. There is no time decay. Correct. This person that is holding MES here, or whatever the heck it is, let's go to trade a bait. This person that's holding MES here, long here, has nothing to worry about except for price reversing. And the same thing is true with this person, right? The person that bought October 30th, 3237, is very much probably still long, right? But this isn't a retail trader, right? These are the big money folks, because you probably would have sold here, you'd have sold here, and all these sells, right? Looking into it in terms of like really intraday, you would have got scared here watching 4 days of continuous selling. You would have sold that position. You would have sold the position here. You would have sold the position there. You would have sold there. Definitely would have sold this. And if you didn't sell this, I guarantee you sold this. And that right there is context that you can use, because think about this. If you really took out all of these New Year traders, right? When does this guy really start to panic? He doesn't until you get back into his time frame, which is 2020, right? If I'm him, I'm thinking, look, I bought this and we haven't even come back to my year yet, right? And that's why that close is important for 3756, because these traders don't get scared yet at all. But again, that's for the future. Do we have assignments in futures trading like we have in options? No, not at all. Sure, like 1 MES actually does come out to like, I mean, if you're really holding like 10 MES, you're technically holding a product that's almost like $100,000. But no, you will not be assigned any full futures contracts. See, we are well above, but again, like I mentioned, I have some time before I head to the park, so I'm still here to answer questions. If I had anything to say last on my thoughts, I know some people are still on here. I mean, levels are always going to be levels, guys. Levels are always going to be levels, and so the one thing you want to do is this. The one thing you want to do is this, is understand that your thought process is pretty much going to determine how well you do here, guys. What I mean by that is you're not going to find yourself, really successful, and you've seen it. There is no overnight fee. Good question, Pam. Let me actually show you some real-time examples of places or platforms you can use. Your thought process is going to be key to how you do well, right? Because time is no longer an issue for you, right? And if you're someone that can be very patient in a trade, you're going to find more often than not that the market wants to agree with you, but everything else will give you a point of reason to doubt yourself and doubt your research or your preparation. So it gives you guys questions or specifics. So what do I need for, okay, got it. So let's say, for example, you wanted to get in trade with TradeAvate. TradeAvate is telling you that you must have an account balance of $1,210 to be able to trade the MES. Now, once you have $1,210, they will allow you to purchase one contract during the night session for $100, which means in theory, using all of this, and if you happen to use all of your initial margin, you could get about 9 or 10 MES. Now, the dangerous part is this. You get 9 MES, that's $45. That's $45 a point, right? So you take a 10-point loss on 9 MES, that's $450. You've seen how easy it is to take 10 points of a loss, right? So by the time you close the position, you've already started out trading, you went from 1210 and you are now at $800. And now, for $800, you're now below the initial and can no longer trade the MES. And now have to fund the account with another $400 before you can now get back in and trade this MES again. So that is how it works when it comes to initial margin and night margin. The same thing is true with the daily margin, right? If the moment 9:30 cash open index hits, you're going to find out that you can trade $55 for one MES, which means that you can get, 20, right? Almost 20 contracts. Same thing. Those are 20 contracts that move at $100 a point. And you do this and you take a 10-point loss, you will automatically, your career will end the same exact date that it started, in 10 points. It will roll over. So after the March contract, I believe is the June contract, and we would just roll over to the June contract. So yeah, anybody who's particularly new at this, especially at the platform, one MES is the way to go all the time, right? Because if you get 20 points, you will collect $100, right? If you lose 20 points, you will lose $100. But this is better than some of the habits that a lot of you guys are used to now and the losses that you've incurred now. And two, it also allows you to stay composed in a market that is specifically designed to take you out of your mental framework, right? You wake up, you had a great weekend, you have a good Monday or Sunday, and immediately it is destroyed because you're already in a position and it's going against your way. And starting from the jump on Monday, you already have to look for news and other pieces of supporting information to help a trade that is already losing. And you may even add to it or hold on to hope, and it continues to lose. And by the time you finally decide, let me go ahead and kind of change or cover this, you're going to see that it's already reversed on you. So definitely a lot to think about there. As for what you can trade, I mean, again, I recommend TradeBait because you can start out with very low amounts and trade as you would normally. So even if you wanted to start with $1,000 and trade only the Russell, if you got 20 points on the Russell in that same day with one M2K, right? Then you're starting out with $715. If you took one M2K for 20 points, you would go from 715 to 815 in one day of collecting 20 points, right? Vice versa, if you went DGen, full DGen, and you bought 10 of these, right, and you're getting at $50 per point, and you've got 20 points, right? Now all of a sudden we start to think about, you know, how fast this balance can grow. But that is the mistake that you will make as a retail trader, is seeing this amount right here, right? Is seeing these low amounts, because you're going to want to naturally go ahead and take 5 or 6 and 7. That is the bait. That is the trap that they set for you, because someone who's not able to control their emotions will collect 20 MES on a balance that he cannot support of $100 per point. And by the time it comes back around, I mean, the damage is already done, if that makes sense. So I hope I answered that. You don't have to worry about like rollovers, and rollovers do have an effect on the market because bigger players are doing rollovers. But a lot of times you're going to find with 3 months in between each contract that you're rarely going to hold a contract that is, you know, you're rarely going to hold a contract for 3 months. And secondly, if it was near contract end, you find you'll probably be scalping or day trading anyways, because near contract end is when you start to see a lot of volatility. Like really start to think about it, right? When is volatility starting to come up now? End of March, which is on our March contracts end. When did you last see volatility? Was the end of December, right? And so these are all little nuances that play into effect in terms of like when the market is going to experience, you know, certain times of volatility and not. But as a futures trader, I mean, look, whether you're in a tight range, right? Whether you're in a tight range in the market and it's only going this, I mean, you can collect 5 points, 6 points, 5 points, 6 points, 5 points, 6 points, 5 points, 6 points, and still come out with a 40-point day, right? Just understanding that you're not trading in a range. So you take the top of the range, you short it. You take the bottom of the range, you long it, right? And you just keep doing that. And at any point of the range, if there's a breakout, right? So yeah, I'm short here, and there happens to have been a breakout, right? My stop is very much tight. So even a breakout here, it breaks out. If it's convincing enough, not only will I stop out, but I would join the party, right? And if I'm right, then it's just a range, and I understand the target is just going to go to the other range. And I might just take here. If I want to keep playing the breakout, if it happens, I get to keep playing, and I'm right. If I'm wrong, I just stop out, you know, when it starts to reverse, and I can even long back in. You don't want to play the middle. The middle is where you will get hurt. Ironically, this is also where the Bears closed, right? Where did the Bears close? They went here, It went down as far as here. They were supposed to close here. Remember, they wanted to close below the SPX 2020 close, but they did not, right? They came in, fell short of the middle, and got ripped into a new one. Now the bulls, they took it to what seems like a key level, right? So what should happen next is that they should head to the next key level, is my thoughts, or at least my initial thoughts. So do we have a monthly fee using Trader platform? No. Let's take a look. I'm not sponsoring these guys, so let's take a look. Membership access, free, right? No commitment. Only pay a commission when you pay a trade. So 0 monthly fee, and you will pay 79 cents, 25 cents for micros, and 20 cents for smalls. So 1 ES, 79 cents. 1 MES is a quarter, and then 120 is for small. You want cheaper margins, $99 a month, or $200 a month if you're going to be one of those people that's going to trade. I mean, almost enough that these commissions would be better off for you to just pay the $200. But to start out, no, you don't need to, right? A lot of you guys are going to be trading 1 MES. It's 25 cents to get into a trade and out, right? So it's very low commissions, no funding amounts, no monthly fees, I should say. Here we go. Funding amounts. Let's take a look. Or is there days or months that futures get right? Yes. All right. Good point. Days. Mondays. Or no, not Mondays. Yes, they're days. Fridays. If you short into Friday, I don't care if you've ever been right one time. The next 99 you will get it wrong. This is just how it goes. So last week, shorting the close actually worked for bears, and that's why last week was a big surprise. But of course, you saw the result, right? Monday we came back and we had a 3% day across the board in the market. So that is a day that you don't want to. Thursdays are days where you need to be careful. The reason why you need to be careful on Thursdays, and I think it's all in our pinned messages, right, is that Thursdays are meant for reversions. So meaning that Thursday's time will reverse on you. And, you know, at that point, you will get hurt if you're trying to swing trade on a Thursday. The last point that you make in terms of focusing and collecting points every day, yes. If you think of this mentality every single day, it is hard for you to get hurt in the market, because whether bearish or short, you will, of course, you know, cover that move. So that right there is my ideal method, is to come in every single day with day trading as my initial goal. But if you get the opportunity to catch a bottom, you know, then it's worth a swing. And that's why certain times of swings, I may open up my stop loss. I may open it to 20 or 50 points. Whereas if I'm scalping, I mean, I have break-even stops all the time, because I'm focused on collecting points. So if I'm trying to collect 8 points in one move and it doesn't happen to go right, it's better for me to take the break-even stop and look for 8 points elsewhere than keep trying to fight for those 8 points and end up losing 10. That makes sense. So using time and just trying to kind of collect your points, you're going to find 5 points here is fine, and maybe $25 on 1 MES, but that's one trade. You do that 4 more times and you've made $100 in a day, right? And it's a day where you haven't really stressed or kind of given yourself much to worry about when you're thinking about it that way. Yeah, actually, so that's something that I'm actually learning to actually get into myself. So being from the US, it's not something that's particularly common, but I'm learning. So that's how I can answer that question for sure. Let's see. What else? Some tips I can give you guys. Let's take a look. Yeah, like I mentioned, everything is context driven, guys. Understand the context, understand that price comes next, and then time. Try to focus less on catching the tops and bottoms, and you will be okay. You can generate your own levels. You know when the markets are going to turn, and you need to actively be thinking and get creative with your thinking, so that way you can always understand how the market makers or the market plans on fading the typical retail investor. Try to stay out of the market. The longer you're in a market, the longer you're in a trade, the more reason and the more likely you are going to get fucked. And that is a simple law, and that is a fact. If you're in the market and you're in a trade, yes, 100%. Yeah, 100%. The Discord chat is not going anywhere. I think for today, the point of today, and I think I mentioned it earlier last week, is the simple fact that I wanted you guys to kind of do a trial by fire, and some of you guys picked up on it for various reasons, either because you have the time to be active, right, or you're in the time zone where, it just happens to be efficient for you to be up and reading through the notes. And some of you guys are not, right? Some of you guys are, much older than myself. You have families, you have other jobs, you have other priorities to take care of. So I understand that as well. So this course, I wanted to keep it as basic as possible, this first course, I should say, only because I want to make sure that at the end of it, anyone who came in and had zero idea about the market and was new to futures trading for the first time would at the very least be able to walk out with, one, an understanding of how to trade futures, and two, how that works in relation to how the markets move, right? And so those were the two goals that I had in mind today. And I think that, I did get all that information out, but if anyone does have additional questions, I have zero plans on going anywhere, and plan to answer those questions to the best of my ability in the chat. And then going forward, there are different, for example, different concepts that, we can discuss. And now when it comes to, of course, not, being able to get into predictive moves and understanding, what exactly is happening. But you can get a good sense of what's happening from all the tools that I've given you now, right? And you don't need to continue to go to another course. Like what I've given you now is enough to carry your trading career. Because you have knowledge that, one, you weren't privy to before. Two, you just didn't know the right context in terms of how it was being done. And we've seen that in real time all day, all week actually, right? And so just using all of these tools, right? You know when the market moves, right? You know how to generate your own plan, even if you didn't, giving you action steps as to how to really get this thing started. You understand what the key levels are. You understand which markets you're looking at, right? Where are they? You understand which markets you're looking at and why, right? And it's not just 12:30 because it's 12:30. It's 12:30 because it's post-US. It's post-US close. It's US lunch, post-close. It's after the US lunch, and the European futures market begins, right? Or the European futures market. The European futures market begins. These are all three different factors that are happening. The U.S. traders must now come back and choose to decide whether or not they agree or disagree with the EU close, and that's the divergence and the convergence that we refer to. It's up to you as a trader to understand, okay, if they do diverge, is this bullish or is this bearish? Because what happens next? The U.S. only gets 2 hours of decision time after that, right? Or not 2 hours, 4 hours, 3.5 hours of price movement, right? Before that even happens. And when this is happening, these guys are in futures, right? So even if the EU dumps in futures, it's hard to say that it's bearish if the close was bullish, right? And that's why the cash prices are the most important, because I don't care what level of key level that I have for CAC. If it falls in the futures market, I cannot care about it. right? Of course, I can pay attention, understand that, it'll draw attraction to more sellers, right? But I cannot trade it and say that I'm going to swing it, because for CAC, the key level was 5777. And if you look here, you can see the low is actually 5755. Wink, wink, by the way, because I told you that Europe is very much in line with all of these key numbers. So you would have went long at 5756 and still ended up on a day of 30 points, right? Because it ended up closing at 5782. So that's the reason why Europe closes and the US goes bullish, because Europe has essentially confirmed that no, we are not ready to sell, right? And so immediately all the sellers were wrong, because they had assumed that Europe would also close below 5777 and that the world would blow up, but that didn't happen. So yeah, you guys have the tools for sure. With all of these three things in mind, you guys have all tools that you can use to get into good trades. Even if you don't choose to continue trading futures, you'll find that these times line up perfectly with options, that you'll be able to, like I mentioned, you'll be able to get into Apple at the right time, right? This is not a coincidence here. It's not a coincidence that Apple also bottomed at the same time that ES bottomed, right? And I think I mentioned that in the trades as well. Like, hey, look, if you guys are looking for a trade, you more than likely should be starting now, because when ES bottoms, all of these are going to go, right? Facebook was not bearish, but it was kind of being held back all day. Get smacked, boom, cash close, fade, right? In terms of the whole happening before this next time. So if you would have bought here, you would have set your stop, let's say down here, law, right? What happens here? People who are diddling in the middle between 11:30 and 12:30 are kind of just stuck, because what's happening here? Europe is closed and US is on lunch. It has not decided whether or not they want to accept this information or reject it. So anyone trading here is subject to just the regular ebbs and flows of the market, which is going to be fuckery, right? So you go here, you long here, you think everything's good, they smack you. You go here, you short here, you think you just won, they smack you. So everyone is a loser in this situation, except the person that bought here, because the price never hits the stop loss, in fact bottoms and goes. Same thing happens again. What happens, guys? Just more fuckery in between, right? When does the market turn again? Global, boom, right? And so just use the times. It can be, trading can be that simple. Just use the times. Don't trade in between. Usually in between is always looking to get someone hurt. Use a stop, and you'll find that you're going to, end up in positions where, perfect. I'm from Asia. Any recommendation? What indices that easy to trade besides US? Yes, perfect. Yeah. You have the easiest time zone of everyone in this chat that's from the US, myself included. Because when you're going to be trading, you're going to be trading indices like the FTSE, you're going to be trading the CAC, you're going to be trading DAX, right? And these are all indices. I'm telling you that FTSE and CAC, they move religiously and programmatically with 4, 5, 6, and 9, 4. Meaning, if there's a sell-off, I'm going to buy XX24 on FTSE, and I'm going to sell it at XX56. Or I'm going to buy XX56, and I'm going to sell it at XX94. Those indices make it very easy for you as a trader to kind of understand this concept. So very much, yeah, if you're, coming from a different time zone and you can't trade the US market all day, or at least until the end of the day, you're going to find that if you can trade the European session, that one, it'll be easier. It'll be easier. And two is that it'll be more lucrative in the fact that, think of what I just mentioned earlier, in that when Europe is moving, everything else is opening and closing, right? And so compare that with vice versa, the US time. By the time US traders are ready to buy, Europe was already profit taking. And boom, the first initial dip buyers or buyers at 9:30 come Friday were smacked, right? And because you're able to trade Europe, you're able to understand context easier than anyone else. Because if you were up trading that European session, you knew that nothing was bearish about it, right? You're like, okay, well, we opened and we rallied. And not only that, we decided to do some profit taking, and that was it. So you all of a sudden you can switch from, trading Europe and then being in the US cash session and being able to contextualize every single thing you see. Because you can tell yourself, I was just in Europe and it was not bearish to me. So whatever is happening here must be a trap. So yeah, 100%. I think that you will easily actually everyone else here, in that you're going to be following indices that, follow the 2, 4, 5, 6, 9, 4 almost religiously. And I think that even if you look through, the major world indices, you're going to just find that these numbers just kind of just stick out. Like this Euro Stocks 50, I don't even know what the heck that is, but it's not a coincidence, guys, that this thing bottoms at 3656. It's also not a coincidence that this is actually an XPX key level that is going to come into play at some point in time, right? It's not a coincidence. It's not a coincidence that this thing bottoms at 5.6, the same bottom is here, right? It's not a coincidence that DAX closes near 2.4, right? These aren't coincidences at all. And again, I can only make you believe that to a certain extent, because after that, you're going to come to find out that truly is exactly how the markets work, right? And instead of trying to get into a position where you're trying to predict the market, you can flow with the market. And that is how to really win. And you guys are going to use these tools next week, and you're going to have a killer week next week. I think that might do it for questions, but remember, message me on Discord if you need anything private in terms of maybe perhaps getting the right platform, or message the group chat, right? I think what I've done now is created a group where all of you now have a better sense of the market, and will, instead of trying to flood each other with news and all these other things that have zero clue to do with the market, you're now sharing information that's generated from the market and kind of are able to keep each other in check from emotions, or letting one bias get way too far. And I've seen that already. So take what you've learned so far and try to, if not apply it next week, just watch it next week. Because I think what you guys are going to see next week is going to be a fireworks show, and it's definitely going to be great for options for sure. I think that next week, I think that options were depressed this week. I think that options go on a major run next week. So I'm definitely going to be following Yvonne's alerts for attendees next week. So just make sure you guys are aware of that. But if no questions, I do appreciate everyone's time. Reach out to Jumbo if you guys are looking to get into more complex theories. I'm happy to get into that. And it probably would take a while to get through, only because certain things after this start to get a little bit more complex. But everything that you've learned today is enough. And so it's not a promotional thing, more as a way that what you've gotten to today is enough to carry you, right? Because come Monday, you're not going to trade at specific times. You're going to look, and you're going to look at key numbers, and you're going to understand, now is when I put my money to work. And that is when you start to lose less theta money and start to get more money and momentum, and stop selling the bottom and buying the bottom, and stop, buying the top and selling the top instead. So that said, I'm really happy that everyone showed out for this. There will be a recording, and I think Jumbo will work on getting this sent out to the rest of the group, so you guys can all check it out. But this was an amazing class. But don't think that any of this is over, right? I definitely didn't. I definitely didn't step up to do this to
kind of better myself in any kind of way, but more so kind of create an environment where you guys are now able to, one, really understand the market, and now this allows you to trade almost to a level of extreme precision, right? And that's only using time, right? And that's only, these are all things that you can do yourselves, right? I've essentially taught you how to fish, and will be there to continue teaching you how to fish. So now at this point, it's just taking what you've learned and choosing to either just watch or, you know, kind of just paper trading and getting into it. But there are times when you would use options, and there are times when you would use futures. And putting all of this together, I'm telling you, you guys will have much, much better results in your trading career. So I'm here to help. If you definitely want to keep going, just reach out to Jumbo. But this is all that you need, right? And so let me just be very clear. Everything you got here today is everything that you will need. If you lean on them and you rely on them and practice on them, you will be getting 10 Ds. So that is my conclusion. I look forward to trolling all of you in the chat in the next couple hours. Have a good one, guys.